y'all.
Cheers, everybody. Cheers, cheers, cheers. Welcome. What is it, Monday? Got this nice kitty that my wife and daughter were working on today. They asked that I show this. It doesn't quite look like a roaring kitty, if you ask me, but it's a good-looking kitty. They worked on that today. So thank you so much. I can hang that up somewhere. Where am I gonna hang it? Can you hang it on a green screen? Probably ruin the green screen, you know. All right, let's jump into it today. Did I get everything working here? I don't even know if I set this up right. Did I do it today? Looks okay on OBS. I think we're good. All right. So long weekend, you know. Let me get this thing out of my head. This chair came with a pillow. All right, let's see. You got a little sense of what was going on today. It looked like a lot of stuff was up, but at least in the Roaring Kitty portfolio, which is always good news, right? But okay. Oh, energy was up today. Okay. What else was happening today? What did I catch happening today? You know what I mean? Like sometimes I'll check in. It looked like I forget. Let's just dive in. What do I need to guess what happened today? I don't know. Okay, so relatively quiet day overall, I'd say. Market was up though, and I guess that's the big news, right? Is that what everyone's talking about? Because the market making new all-time highs. That's it, right? Oh, a little bit of a gap up today. Oh, that's what people were talking about. Okay. Oh, the stream. The stream says it's like not receiving smooth. I think everything's set up right, isn't it? Sorry about that. I'm getting the alert message on the stream saying things are bumpy. Not sure what that's about. But let's keep moving. If there's any issue, let me know. Okay, so a little bit of a gap up today. That's kind of, but still right there. Oh, is it breaking out? All right, I don't know. One day, a little bit more time. Let's see. It's been a little while since we checked this. All right, so on the weekly, huh? It's looking pretty good on the weekly. I feel like it was a week or two ago that we checked up on this, but this looks pretty good. Yeah, is that upsetting people? I don't know. Wasn't the Dow still trying to crank back? Yep, still trying to crank back, but looking good. Everything looks good. What is there to say? Maybe it doesn't end that way. I don't know, but right now, okay. And then what was the Russell 2000? I'd like to check the Russell 2000. Oh, what about the NASDAQ one? Just let me check a couple things. It's been a while. What is it, Monday? Yeah. Probably should check these on like Fridays and stuff. Wow, everything kind of gapping up today. Is that why? Oh, wow. Huh. What else we got? Germany. Remember Europe was like kind of lagging and stuff. And what's the Euro next doing? Still kind of all flat. Hey, let me open up a couple of these because this is it's only a couple of days though. Who cares? But I'm just kind of curious. I think I need to do this once a month or something. But Japan, all flat. And what's a good one? How about just the Wilshire 5000? Just about everything. Everything looks good. What are you gonna do? Just watch. Sit back and watch. You know. Energy was up today, huh? What's that about? I didn't see it totally reflected in the Roaring Kitty portfolio. Did you see that today? There were some things were up. I didn't think it was up a ton or anything like that. And what's this? XLE? Still flat. Nothing going on. There's nothing to report. Nothing to report. Keep on moving. Who cares? Oh, but remember, if we looked on Friday though, when everything was looking kind of bearish. Remember this? We was like, oh, this is something to keep an eye on. And lo and behold, it was either probably going to break or bounce. And I don't think I took any action on Friday. It was kind of just like, all right, this is something to watch. And if we do a little bit of artwork here, just like that roaring kitty that we just had, huh? My daughter would be proud. It bounces like right back up, you know what I mean? So it's kind of telling. It looks like it's bouncing up. If there's anything to this, the hell do I know? You tell me. You tell me. But it would kind of make sense if it bounces right up. What is this weekly though? What is it, daily? Oh, it's daily. What about, was the weekly kind of in the same? Yeah, weekly is the same shit. Look at this. It's like right there, huh? Wow. Unless there was news today too. Was there news? What if we do this? ExxonMobil. Norwegian SMS sells out. What is this? Okay, what's it? There we go. Thank you, Seeking Alpha. Coming through in the clutch. Energy sector component trading in the green. Yeah, any reason? A pair of strong storms in the, yep, Gulf shut more than half of the, oh, shut down oil. That's the thing to keep an eye on for, I mean, oil production, but also natural gas production too, right? Because if they knock out like one of those hubs or something, all these prices could head up. That's not a major part of the thesis, but it's something, those supply issues you got to be aware of. It's something you don't really get with many other industries. Including today's game. Wow, okay. So, but nothing big. I did see natural gas was up, though. Natural gas, huh? Look at this. I did see this. This was something I did see, and because it was those natural gas plays in the Roaring Kitty portfolio kind of bouncing back a little bit. Look at this, above 260. Remember when was that first stream? August 3rd. And it was like, we talked about that first day. Boom, boom, boom. I mean, I had no idea this was going to happen, but also, it's not like, I mean, this could come right back. We talk about it's volatile and stuff, but this is hugely bullish, huh? Look at this. Okay. Okay. But not much else. It's just kind of things just grinding higher today, I guess. Whatever. And then oil, natural gas. Yeah, so the price of natural gas. We'll look at the natural gas plays here in just a second. But gold kind of bouncing around. Now, see, I don't even need to pull up the chart. I kind of know. We know what this is. We know the price points. 1927. Copper. Didn't it bounce above 3 there for a little bit? For briefly for a couple days. But right on trend there, hanging in. Look at that, right? Everything looks bullish. And we saw these popping. Yeah, look at the. Let's dive a little bit deeper. Did we pull up XCS? Oh, we did. It's right there. But what was that on? Oh, is this OIS? OIH. That's it. Yeah, they're all gonna say the same thing. We get it. And natural gas, right? We get it. Okay. Aerospace and defense up. What's that doing? Okay. Banks. Was banking up today? Interesting. They're kind of following energy, right? I mean, that's those value stocks. Everyone calls them value stocks. That chart looks good though, huh? Bouncing off the same. Look at this. It's the same line. It's the same thing. It's the same thing as energy. That's just banks, and then regional banks. It's all going to show the same thing. We get it. It's already 710. Oh, value. There you go. I knew we'd come across something. And there you go. Value stocks, right? That's good for the Roaring Kitty portfolio. S&P 500 value. You can see. Look at they're all tracking. These are all the same. This is all the same chart. That's what I mean. Like oil stocks. They're usually a good proxy for value. You will probably see. What about emerging markets? Bit different. Smaller ones, a little bit different. And just curious, but very similar looking chart, huh? They all kind of peaked there on June 8th and kind of bounced around. Now starting to pop up, but really no big moves. It's just something to note today. That's all. It just hasn't given everything up. All right, I get it. You get it? I get it. We get it. Is the VIX that break below 20 yet? that trend looks down. Wow, it's been high for a while, huh? And you see that reflected in options prices too. If you're looking at options prices, they're all super damn expensive. I mean, it's good for the options positions I own, but trying to buy more, forget about it. I can't find much on the options front right now. I'm fortunate for the ones that I did buy, so there's a trade-off, but that's how it works. And then ENS, we got that. Transocean was up big today, huh? Oh, Baytex, remember we just added that to the portfolio, and that's just gonna be some good timing. It's not up. Why is it light up 3%? Oh yeah, what's rare earths doing? I'll check it on that. Just bounce it around there. All right, kind of a good proxy for risk taking. Alcoa just crushing it, but 15 about the same. Everything's in this. There's not really much happening today. Oh yeah, what's Goodyear doing? Goodyear. That's all the same stuff. How many times can you look at the same chart? I go crazy. That's why I'm like, let's just pick a couple. I can't scroll through all these right now. This is a good company. They do like if you know like baseball cards, basketball cards. They do cards. They do the grading PSA and stuff like that. It's a good company that it never quite got cheap enough this time, so I didn't dabble. But boy, it's bounced back strong. I've been kind of waiting to. This has been on my radar for 5 years, and never. It was a dividend payer, so it never got super cheap. But you know what I've been waiting for is I thought I've been waiting for like a recession to dabble in something like this. I figured it would sell off hard, which you did see in 2018. It sold off real hard. Fell from 25 down to it did get below 10, and but when we're in a recession, it's a tougher market because like things like cards and stuff. It's not just cards; it's sports memorabilia. Really, they do everything. But there's only a couple players in that industry, like PSA and what's the other one? There's Beckett. There's a third one, BGS, and but I always thought it's like more risk-on behavior, you know what I mean? And so we never got that really prolonged recession. I had this big pullback right here, but even then it didn't get that cheap. It's pretty impressive. And so I've been kind of waiting for it to get. But it's a good company, you know what I mean? This is one where maybe I should have pulled the trigger for more of that like compounder type style. But I'm trying to like I mentioned in some of my videos, I try to diversify my investment style. I'm a deep value guy, but in the same way I'm looking for trendy stocks, I'm also looking for good businesses. And there's a strong case to be made. I could have been buying this in March, but I never would have gone super heavy because I don't know. My outlook isn't like 10 years, but looking out this 10 years, this could be a good company just because of its strong position and a unique industry, whatever. Anyway, it's been in this column this whole time, and it's really bounced back strongly. Blockchain. Oh, what's Bitcoin doing? It's like Monday. I feel like get caught up in everything, man. Nothing. Looks bullish to me. It's holding up. You know what I mean? Is this weekly? I guess. This is bullish. I'm not doing anything, but all right. Everything looks. How do you not look at today? What's marijuana doing? That's one. I don't have any exposure right now. Oh, it's a little bit bearish, but also it could be a time to add. This is. I mean, what the hell do I know about? I mean, marijuana is one thing, but the investing in marijuana, the industry. It's a tough industry, and many of these players probably won't be around. For the long term, who knows? It's one of those. But there could be some big winners out of this. This is kind of why I included it in this column. Who did I include? Just Canopy. Just can't. I just picked a big name. There's a number of players, but I'm not an expert in the industry. But I always thought maybe it deserves a position in the portfolio for just a risk on. Not a big position. What the hell do I know? I don't know much about. Which of these players are going to survive over the long term? I'd probably just go with the big names and invest. But you could think because of it's a new industry here, and one of these could take off. But I don't know. This looks kind of interesting now. What's the take on marijuana these days, huh? It's not real, as you can tell. It's not my style. You know what I mean? Deep value investor. What the hell would I even be looking at these for? But I got, I got the that Bitcoin position or the Bitcoin trust, whatever it is. Like I'm not I'll dabble in these just to play, but it wouldn't be a high conviction. I forget some other names. You remember some other names? I should toss some others in here just to keep an eye on it. But if this is a good ETF, which I'm not even sure. I mean, this looks terrible. I mean, that looks. I don't know what I'm talking about here, but it's more just like the industry. It's one of those. I don't know. It actually looks way more bearish than some of the other risk-on things, huh? Almost too bearish. Like Bitcoin, I think, all right, that looks bullish, or even something like a Tesla looks bullish, but this looks bad. If you can't look good in this type of, if you're the marijuana industry, you can't even look good in this environment. I don't know what. That's a little bit of a turnoff. You know what I mean? And this doesn't look good. I don't know. All right, anyway, I'll keep on watching it. I'll keep it here. I'll keep on watching it, but I can't do anything here. In this one, how about some space stocks too? You know what I mean? I like it. I like this risk. I like this risk column. This is sick. It's kind of bouncing all over the place. You know what I mean? You got to be holding up pretty well in this environment for it to be interesting. But what was that other one? Nikola or something? I don't know. Maybe that's probably a good one to add to this too, you know? I mean, I don't think I can pull the trigger on some of these, but what is the ticker? Let me look at that. That one looked ridiculous, didn't it? Oh, I want to look up Tesla. What time is it? 7:17? We're doing okay. This is just pulling up a couple. Look at this, huh? I mean, what's Tesla doing? Damn, it looks good. Wow. I mean, now I don't have any more forecasts. The 2,000 was just about it. You can't. Can you really say 3,000? I don't think you can. What's the market cap? You can't really say. You can't really say. Oh, I pulled out the profile. I meant to pull up the summary. 375. At some point, the value in you needs to put a stop on it. But I don't know. All I know is right now it still looks bullish. So what else can you go off of? But if you see the weekly, so look at this huge, remember this hugely bullish RSI, and now it's kind of pulling back a little bit. This is, as the books say, bearish, blah, blah, blah. But as the books say, the value books, you wouldn't have touched this in the first place, that it's 10 bag. Is it a 10 bagger? It's a 10 bagger? What am I doing? That's all the value investors say it, huh? What I should have bought, I didn't buy it. As you know, I'll buy when the trend looks like it's breaking out. I did not buy it right here. But this was super bullish. This breakout right here last year, it was a mistake not to be buying it in, what was it, December? This was hugely bullish, and it was a mistake not to at least get a starter position. You know what I mean? There's been a lot going on. And, but that was hugely bullish. And then remember, then it pulled back. I mean, how many times am I going to say it? Then it pulled back to this area right here. It was a good time to buy. I should have been buying. So, I mean, I'm a value investor, right? But this was, from everything you see here, it was worth taking a position. And does that make me a bad value investor? I don't know. Maybe it does. I don't think so. But shit, I don't know. Okay, enough with the risk column. Let's check out what the Roaring Kitty portfolio was doing today. Let me just close out of some stuff. The stream looked like it's holding up okay. All right, let's check the portfolio. Let's hope for some green, huh? We're going to see green. Oh, so much green. Yay. Woo, woo. I got my phone on me. Wow, lots of green today, huh? Sir, RFP, huh? Damn. That day. I'm going to complain about not... I should be happy, right? It's the second position in the portfolio. And it's crushing it. But this day was the day I was supposed to add, right below 3. Standing buy orders. You got to have the standing buy orders out there. Damn. And now it's not going to give you another opportunity to add it. What am I supposed to do? I'm waiting for a pullback right now. I'm totally going to add to this. It was, like I said, it's a high conviction play. It's why it's such a big position in the portfolio. And then what the hell's lumber doing? What's this doing today? Look at the, oh, wow. Yeah, this is inevitable. These big, you can't have this much volatility on the upside or the downside and not have a reversal of some sort, even if it's just one day. This is such a big move. You'd expect this to persist for a little bit here. Human nature, you know what I mean? What was RFP up for so much today? I can't believe the market's gonna stick it to me on this one. What was it? That was Wednesday. What's the date today? 24th? As lumber futures rise. What's this? Impose unfair tariffs on Canadian lumber and a decades-old dispute with the U.S. There was nothing on RFP though, right? Well, this is where I am. I'm an idiot. I meant to look up lumber or something, but all right. We'll just wait. Just keep on waiting. Where am I going? Where am I going? Sorry about that. I hate when the high conviction. Now I just gotta wait for it to pull back. That's I need to put that restriction on myself now. I can't chase it because I've done this. I've done it so many times. I've added on the breakout, and I feel so stupid when it inevitably pulls back. I mean, I'm not saying it happens every time. It doesn't, but it's already the second largest position now. It's like, all right, just ride it and take the gains and blah blah blah. CNR holding up after broke out on earnings and stuff. NGD gold just hanging in there. TSE was up 8% today. That's sick. I'd up this position. I'd up this. It's just grinding higher. You know what I mean? Chemicals. I mean, I really believe it's worth $50. I strongly believe it's worth $50 plus. That's why it was the top position in the portfolio for like a lot of March and April, which turned out to be a good decision. It turned out to be, it was like holding its value quite well, which I was pretty happy about, and I felt strongly about what the value was and the size of the company. I was pleased with that decision, that it held up as well as it did. And now it's just been a slow mover, so the other ones are kind of outperforming it, right? No big deal. It's just what it is, this size of the company too. This is, I like this. And then what happens too is then you start you deal with this, right? Then what happens is you start getting the winners, right? Everything starts working in your favor. Not today isn't, you don't go off of one day, right? I'm talking multiple months. And then you start thinking, all right, I'm right about everything. So then you start buying more of everything, which I'm definitely feeling a little bit of, where I'm like, all right, I need to put more in this one, put more in that one. Speaking of which, I didn't even say, look at games. I added more games. GameStop. Oh yeah. What did I skip right over it? Look at this. They pulled back today after the run up on Friday. I bought more. I don't know if I can buy any more from here. I mean, I own some outside of the Roaring Kitty portfolio too, right? But as far as the Roaring Kitty portfolio, I think this is it. I bought in this pullback today, and I was down like 8% at one time. Then it pulled back pretty strong. I was like, what the hell's going on here? Look at that. Oh, that's intraday. Oh, what the intraday? Do you know intraday? What am I day trading? Look at this. Yeah, I bought on this pullback. I'm like, what the hell? There's no news or anything like that. These volatile, highly shorted stocks, you're going to see that happen. I'm like, all right. I said this. I wanted to pull the trigger one more time on a good chunk. And the market gave it out today. And I'm like, all right, this is it. Because we're getting so damn close to what I consider is going to be a busy news season. We're like days away, weeks away. Earnings will be mid-September, I suspect. Probably between September 10th and September 15th based on when they announced last year and the timing of everything. Maybe give or take a couple of days. What the hell do I know? But couldn't they announce? They could announce some news before that. But I expect it's going to be a relatively still. They got one more rough quarter. But now we're so close to the consoles coming out in what I consider really good news. We're going to have super powerful year-over-year comps. Like it's almost going to be. They got like one more like questionable quarter to get out, which could have already be priced in, right? I mean, I believe it's already priced in. But once they get that out, like they could just be a string of just good news. And so we're right on this cusp of like a 4-week period right here, and where it's like the kind of final positioning, you know what I mean? And so it pulled back 8% today when everything else was up. People probably just tossing it aside and buying all the other value stocks. And but then it bounced back strong. I was up on the day. I'm like sick. But anyway, this is a big position for the Roaring Kitty portfolio. I handle the other accounts differently than I handle this Roaring Kitty portfolio. And like it's been, I want to keep it more diversified and blah, blah, blah. And but I feel like the downside is relative. When I look at everything, I know I repeat myself over and over again, but when I look at the other positions in the portfolio and I compare the asymmetry between how much further they could fall down or how much upside they have, upside asymmetry, you get that, but like it still looks super compelling to me. And so then I start worrying, am I crazy? That's why if you have feedback on those videos, feel free to I don't care if you agree with me or disagree with me. I am super curious because, and then people make fun of Mike Burry, like damn, something might be wrong with us, or we're either really right. And even when I compare it to like an RFP right now at the current price point, I've been hugely bullish on RFP. It was a super steal back when it was $1-2 here, less so. Like, and And the downside, I feel, is more meaningful than say a GameStop per se. It gets really, when you get into the nuance, it's really tough. I can't say that so confidently, but with the amount of cash that GameStop has and what I think it's going to generate over the next couple of years, I just think it continues to be a silly price point, below $5 here, 300 million market cap. Anyway, so I added today. I meant to, so we're at 15%, which is, I mean, I look like an idiot now, and it's like the only videos I've uploaded. It's like. Anyway, there'll be. I'll upload more videos. I know I mentioned that on Friday, but looks like pretty decent feedback on that GameStop video. So if people like that, I'll do that for some of these other things. Oh, you see me post a couple of did I? Oh, I didn't post this stream on Twitter today. Hey, let me just do that real quick. Oh, you can't see me. I did it over here. I just post this real quick. But then what I'm gonna do is, you know what I should be doing, and I should be I made a couple of posts. Oh, sorry, I can't see the thing anymore. I made a couple of posts here on some of the companies that we talked about. I should be doing, and I know I should be doing this. So one thing I'm not, I'm not being proactive on a lot of these websites and stuff like that. But that's because I just don't have the time. I'm like focused on other stuff right now. I'm focused on the research per se. But really, as I get in the swing of things, as we kind of build a routine on the live streams, which I know we haven't done yet, I apologize for that. But we'll routinize. Is that a word? Can we just make that up? And we'll get more of a routine. I'll have more time to do this type of stuff. But for right now, I'm focused more on the research itself. But like I figured, I mean, we talk about this stuff. We take these good notes, reminder notes, right? This isn't thorough analysis or anything like that. Shit, you think we don't know that? We know that. But it's like, once you're dialed into these companies, it's good to look at. There's only a couple bullet points. You pull it up, you check it out, and it reminds you, say, hey, let's look into this. And so I forget when I did this. Yesterday? Saturday? I don't remember. I looked at some of these notes and I was pulling up some of the things. I'm like, oh yeah, this looks kind of compelling. You know what I mean? So and I know we talked about a couple of these on Friday, and I'm like, let me just put this on Twitter. So stuff like this. I mean, I'm supposed to be doing more of this. That's how this shit works. I know that, but I'll get there. You gotta give me some time. Give me some time. But so I didn't buy any more NGS for the Roaring Kitty portfolio yet. I think I did buy a little bit more Forum FET. And I'll buy more of these, though. I got to raise some cash. Ugh. I got to raise cash, period. And so I've been, I trimmed some positions. Oh, and we took this note, too, on Friday. Trim CVE. Oh, is my thing not working? I thought that thing means it's working, no? I got to let that highlighter thing. I need a new highlighter thing. Anyway, see these two right there? Can I just tell you? I trimmed CVE and XEC. I figured too, because I was buying those. I bought some more Sandridge and I bought some more Intero. Those those were up today, because I mean a lot of stuff was up today. No big deal. But I just need to raise cash, so I'm down to look at these damn positions. How many positions are I'm blocking it? Sorry about that. Let me pull this over a little bit. There we go. All right, so I'm. What are we down to? I think I saw it today. I think I saw like 140. All right, of non-nominal positions, I think it's like 145 or something like that. Right here. I think CNDT. I think I saw that in the portfolio. I think that's the smallest one. And then these are all just nominal positions, as you can tell by the percentage of the portfolio. I kept them in there just because, just for now. Again, I don't usually do this, but I felt compelled to manage like this type of portfolio differently this year. And now I found it helpful to have so many positions in the portfolio. We can see what's moved and stuff like that. But also because I don't feel like we're totally out of the woods on everything yet. So kind of just reminders for me, really. But there's just such small positions. I just keep them in there. But anyway, I need to start. This is ridiculous. It's still ridiculous. But as time passes, I'll pull back on these positions because I'll feel more comfortable with where we are in the market and so forth. But slowly but surely. It just takes time. Anyway, I need to trim out some of those. I need to get the cash position back up. Oh, here, I got this. Did I update this? Yeah. Yeah, look at the cash, 0.6%. I may look back in this stream and be like, what the hell was I thinking? But I'm in the process of raising the cash. It's because I pulled the trigger on GameStop today, whereas I didn't have a firm plan to do that. But, yeah, we'll see. Oh, now it's... So energy's still 20%. Even that's what I mean. Energy's still 20% even after I trim that. You know what I mean? 0.6% though. Oh, that makes me uncomfortable. I don't know about you, but I have other I have other accounts besides the Roaring Kitty portfolio, but I care about the management of the Roaring Kitty portfolio, and so I it's much more of your traditional portfolio management approach where I try not to screw up with this type of stuff, and this is a little bit extended given where we are with the market, but it will take me a couple trades to raise cash, right? And this is mostly GameStop, right? 32%. What is it? 15. It's half of that is GameStop. But then energy, I'm still bullish on energy and material. See what I mean? These value's been working, hasn't it? Consumer discretionary, energy, materials. I kind of forget. Like, I got all this for better or worse. In particular, oil, gas, equipment and service, metals and mining. Chemicals, 6%. I haven't looked at this in a little while. Let's just check this. I'm sorry. Hold on. Industrials. Let me pull this over a little bit. Come on, can I fit it? Oh, I can fit it. Nice. Cash, industrials. I'm bottom up. I mean, you know what I mean? This is a reflection of my bottom up stock picks, which I always find interesting because I know people do the top down stuff, right? And they go, oh, I need this much exposure, that much exposure, but I do the bottom up stuff and focus on the individual companies. But then I back out. I'm like, so this is what I was thinking. But who's surprised by this? I'm a value investor. See, I'm always going to end up in these types of plays. But like I mentioned, I try to diversify my styles. And what you see here, I wanted this should have been higher because I wanted to buy some trendier stocks. And but next time, and I'll get in the swing of things as we get that trendy section of the spreadsheet of I don't know what I'm doing. I think I have a plan in my head, but I don't know. I'm faking it until I make it, you know. No, specialty retail, that's all GameStop, equipment and service. All right, so chemicals, household durables, I don't know. Aerospace and defense. Okay, and how about look at this. Hey, that looks better. Hey, look how diversified I am. Shit. Computer and electronics retail, I guess, is GameStop. You know what I mean? Some of these are like weird. I mean, I guess GameStop, that's GameStop, but still, you don't think of computer. I think gaming. And this is the sub-industry too, right? So you expect it to be a little bit, but anyway. Oil and gas, home building. Look at this, home building's still up. The home building, just crushing it. Just crushing it. And gold's been dropping just because everything else is now performing well while it's stabilized a bit, so it becomes a smaller percentage of the portfolio. Refining, that's mostly PBF at this point. I think I trimmed Holly. Biotech still 1%. Interesting. I forget all the names. Pharmaceuticals, those are all nominal. All right, good to check up on. I don't know. Okay. I don't know what I'm actually going to... I don't need to pull all these out. This is the thing. We know value was up today. This is why it's good to start with the dashboard. So unless you see something up huge today, like RFP, that's up surprisingly big. Was there any filing? Do I have SEC hidden in here? I feel like I say that every time. Google. Oh, let's do this. Hey, let's do this. This is going to be used so much more. So I've realized I haven't used it during the stream this much, but this is sick when you need to like quickly home in on the different the different companies within the industry. And now let me just check. Oh, it's not forest products. Where does it fall under? Is it not forest products? Where does it go under? Paper products. So look at this. So we could do this too. And right off the bat, you see it was up 13% within this sub-industry. These are based on sub-industry. And but everything else wasn't up. Okay, now I got to check this. Nothing. 24th. Nothing. You know what I mean? Who knows what's going on with this company? Which of course, as it's turning out, was a bullish indicator, which it sometimes is. Sometimes quiet is bad. If you're in like a really high risk company, if you're in like a really high risk speculative play and stuff like that, and you know like management's supposed to be doing stuff, and you're not hearing much. Actually, you're not hearing much with GameStop right now, but this is a good example. But I actually think this is bullish. But with some more riskier stocks, or if they go quiet and they're not sharing anything with investors, that's a bad sign. So I have sold out or trimmed heavily on like the silence is bad news. I don't like this. With RFP, that was kind of weighing on me a little bit in March, April, May, June. But there's a lot of value investor. There was enough good stuff where it shouldn't have weighed on me as much as it did. But there was just so much uncertainty, right? We're all in the same boat there. Blah blah blah. And so because it was super quiet, not much was happening. No one's really taking any positions. I'm like, what's going on here? No insider buying, no anything. And as it's turning out, that was bullish. And I should have been buying more and buying more. And it's already a big position of the portfolio. So I'm just like, I'll just sit on it and we'll wait, opportunistically add and stuff like I just missed. And here it is. It's almost a 5. It's going to be a 5 bagger. And I had said, I think I mentioned this on the stream. I said it to a friend on that day. All right, this is my last. So much of this stream is be lamenting. But on that day, I said this is going to be one of my 10 baggers. There's like 5 of them that I was like super dialed into. It happens during major pullbacks where I have this feeling of this has 10, like solid 10 bagger potential. There's already a ton of 10 baggers out there. I feel like I'm saying the same exact thing I said last time. I can't remember. Camping World was a 10 bagger. I didn't think that was necessarily going to be a short-term 10 bagger. But I didn't think it was going to be a 10 bagger potential because I was still buying it like 10 and 15. So it's Camping World, RFP. Tech never got cheap enough this time. Tech was one the last time. And like Antero, I didn't think Antero at the time. It's now looking like it could be, but I was like super. There's a couple of I forget off the top of my head. Anyway, so this is sick. I like this. I don't know if you track industries and sectors and stuff like this, but when you can quickly pull in, and this is helpful for when you're screening too. So if you come across a company, and you think, okay, well, what's going on? I got some of the more important stuff. What the percentage gains to get to the 52 high, 6-month insider buying. Is it not working right now? Oh, sometimes it's not working. And then the business and stuff. And then you can just quickly see, and I can even sort by different things. It's sorted by market cap, so you can see it's a smaller player in this space. But yeah, I guess so. What about materials generally? Anything up bright green? See the bright? I don't see any bright green across the board. The colors are industries. Like gray is like, this is a similar industry, paper and forest products. And this is container and packaging industry. Well, not much bright green today. So RFP leading everything? Interesting. Yeah. Oh, OLM was up today, huh? Oh, they bought. So look at this big move up, huh? I don't know why. I mean, value was up today, right? But look at this. So they bought before, right? And we were just waiting because that chart was looking bad. Right now, the chart's like starting to look, all right, maybe it's got some life. It's not totally given up yet. This is a good sign. But they bought another 100K. When was this? I feel like I didn't pick it up during the stream. I don't remember it. Oh, it was today. They followed it today. So another 100K. Same guy, Scott. This is looking good. Wait, what is this? Oh, this is from 2019? Oh, hell. Okay. But we're up over 500K, 600K now? Sick. Yeah, keep it... Oh, let's get back to this. Continue, keep close eye. More insider buying. So chemicals was just crushing it today, you know what I mean? That's why Trinseo was up. However you pronounce it. Trinseo? I don't know. Okay. All right, back to the portfolio. All right, let's just go through PBF. All right, and then just one other thing. I just want to check in. So Intero's bouncing back, so this is going to look like this is going to be good. Could be. Could have been good timing on that purchase, you know what I mean? It's up every day since. Let's see. But nothing else really going on. It's the same old story. Everything still looks bullish. The pullback. And then let me just see EQT. All right. You know, just everything's there's no real news today. You know, what's Sandridge? This is still looking. I've been checking some stocks. I'm going to check up on more frequently when I'm like trying to add or I think there's quite a bit of upside. So all in Sandridge, one that wasn't even in the portfolio. That has 10 bagger potential from these lows. That could be $8. It was just $8. It was $8 last year. Was it $8? Not quite 12 months ago. That like previous highs and stuff, that stuff matters. It all comes down to value and stuff, but all right, travels. I did see this travels. We just talked about that on Friday, didn't I? I think on Friday. This has got a lot of operating leverage. This thing can run up big, but it's risky and speculative. But they own those like gas stations on the side of highways and stuff. You've seen them, travel centers. I think that's even the name of a lot of them. But was it the Portnoys have like control of the company? And it hasn't like historically been super well run, but Just a ton of... Oh, here we go. This is one where I'd like to look at the metrics here. Some insider buying, but not much. Excuse me. This was probably up so much because it's got a low float, I think. Market cap solid, 322. I like that. It's at its 50... Is it at its 54% to 52-week high? So it's right there. Yeah, look at that. That doesn't seem right. It's got more than that. Look at this, $5 billion in revenues. Big company. GameStop's big, which I didn't realize. Boy, I forgot that. Okay, yeah, travel set is $5 billion in revenues. Like serious. And look at this. So 29.2. Oh, I'm bad at this. 29.2. It trades at it now trades at 3% of revenues. A lot of upside operating leverage if they can just become profitable and stuff. And yeah, I'd like to add. I haven't been so I did a good job adding, but sub 10. I knew that was cheap. I missed it in July. Now I'll just watch it. I mean, I don't know if it could get back here. Could it? I don't. Oh boy, now that's not even that far away anymore. Boy, it's really run up high. It never got as cheap as I thought it was going to get. That must be the operating leverage. I remember thinking like this. Maybe it's not as risky as I thought it was because they kind of got control of it. They kind of keep it. Also, there's some related party transactions because of the Portnoys who own it and stuff. RMR, I think, are they the ones who run this? Or I think, was it the Portnoys run RMR? I forget the story off the top of my head. Maybe on a pullback. I got to dig back into it too. But the pullback's got to be sizable. Maybe 15. I should come up with some acronyms. Pullback to 15. Nothing to do. Boy, that was up 30% though, huh? Not much else. OLN we saw everything up 8%. This is just all value. Fossil moving. I didn't buy more, but I know we said that I should have. Because it never really pulled back after that leap. What the hell happened here? Anything happen? I don't even think anything happened. That's kind of annoying when that happens. I think the insiders bought. Did they buy more? No, they haven't bought since June. I mean, they bought a shit ton in June. I definitely said this at some point. Not enough people were talking about it, but I don't know why it ran up those couple days. Whatever. SPR. DBI is still under 7. RVLV. I've already added to DBI, right? I'm surprised I haven't added more with it still under 7. Anything happened recently? No, nothing happened recently. I like that it's still under 7 though. And fossil below 6. I mean, I know people why would you watches, right? Who cares? But it's about asymmetric upside. It's always about that. And they had a pretty damn strong balance sheet. Now I got to check it. 8/13, a couple weeks ago. I got the date over there. That's why I'm always looking over there for the date. And I sure as shit can't remember it. So, all right, here we go. The market cap is what? 300. 277 in cash. Like right off the bat. There's other stuff to consider. Blah 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 blah. But jeez. Total current assets. Oh yeah, you know what I know? You know what I noticed? When I posted these two, like positive net nets, I care about that. I don't always pick up on it right away because I feel like I haven't said it too much in the stream. But I was looking at both these, like something like FET, super. I mean, on a relative basis, I mean it's a speculative high risk energy play. They're buying back bonds at 40 cents on the dollar. You know what I mean? Like, if your bonds are trading at 40 cents and you're able to buy them back, you're in a shit position. You know what I mean? But to be in that position and still have a positive net, obviously trading below net is the whole Graham style, right? But to just even have a positive net where your current assets are greater than all of your liabilities, they had like a good, surprisingly high amount of cash. And the same thing with NGS, which already had a strong balance sheet, a much different level of risk, of credit risk than FET. But they both stuck out to me. I'm like, oh yeah, this is worth mentioning. So this was me trying to like boil down to a couple. What is it? 100? Is it still 140? Is it more than 140 on Twitter? I forget. Get the whole thesis. And this is the thesis. That's what I mean. I feel like I get these videos short. This is the whole thesis. What more do you need to know besides this stuff? It's good. Usual. Sorry, I mean I'm talking about FET now. I'm jumping all over the place. But this is my point when I'm looking at some of these names. I'm like, this is it. And so we go back to Fossil. I'm not going to make some long pitch about. Didn't I see a good post today by someone posted a thing about what Bill Miller says about a thesis? I couldn't agree with more. Like he's about like how your thesis can be so simple, so short. And it's funny. I had posted this on Sunday, and then someone posted that today. I'm like, yeah, I agree. You should be able to tell your whole damn thesis in a minute or two, which is why those hour-long GameStop videos are silly. But is why I've been cutting it down because it doesn't have to be that long. It's more to just for the people who just want to learn about how to perform that type of research. But the actual thesis itself, you're trying to get people's attention, you should be able to do it in a tweet as well. Now, on a relative basis, that takes more work. That's what we're doing during these streams, right? You need to compare it to other plays. I mean, you can't just, and it needs to be the context of the portfolio, blah, blah, blah. But the stock pitch itself could probably be shared in 140 characters. I forget. So anyway, so Fossil, I see this, and I don't think it is. It is a net. Is that a positive net? I've never done any back tests or anything like that. Maybe some people have. Obviously, trading below net is one thing. But if you take, like my style, I've never really seriously integrated it. But if you took my style of value investing and you cut down, because a big risk that I deal with is bankruptcy risk, right? And then if you just looked at some positive nets, and like that was a quality variable, if you will, I just expect it might perform well. I don't know. Well, let's test it. Let's see how NGS and FET and I guess even Fossil turns out. They don't have lease. Oh, they do have leases, but they cancel out. So they have $240 million in debt. Cash covers total debt. You know what I mean? Like this is the stuff I see. This is why I'm like I'm not gonna make this is where I was going with that. I'm not gonna make a pitch to you on watches. I don't know. I mean I'm not even wearing a watch. And I've never owned a Fossil watch, but I know it was historically. It was, which its past performance isn't always indicative of future performance, blah, 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 blah. But they used to crush it back in the day, so we'll check that off. We'll pull it up. And anyway, now as I'm looking at the balance sheet again, I'm like, this looks good. This is as of July 4th. It's like super positive net. But the question is, people are saying, it's similar to a GameStop risk, and the people are like, no one wants this shit anymore. No one wants your shit. There's competition. In this case, I mean, they got smartwatches and stuff, although I'm sure Fossil's trying to get in that space, right? Is Fossil? Oh, let's close out some of this stuff. Confusing me. I was going to pull up the fundamentals. That's what I was doing. I just want to see if anything sticks out to me. Deferred income, lease liabilities. It's such a clean balance sheet, too. So simple. So simple. Inventories, and people say, "Oh, the inventories aren't worth that much." And now I'd be curious too. Has the management team been flipped over? Are they trying to do similar stuff to like what the GameStop management team is doing? That's the thing, is that you get the right folks in there. That's what I was saying with FET. Sorry, I'm jumping all around, but like they did have some management changes, but that wasn't a big part of this thesis. That's why I didn't even include it. But they're trying, and with the bond, they did the tender offer and then the bond exchange, and like they're going for it. They may not succeed, but they're going for it. And in the case of, not NGS, but in the case of GameStop, they changed the whole management team after they dropped the ball for years and all those shitty acquisitions and stuff. And when people think GameStop, they think, oh, it's secular risks and no one cares anymore. But like the management team's trying to change that. They may not succeed either in like transforming the business and stuff, but they're trying, and it's a new team. And so that's the thing. Maybe Fossil has this too, and I don't know off the top of my head. If it were a bigger position, I probably would. But that's the thing. Maybe it could be. I certainly liked it more at $3 than I did. I certainly liked it more at $3 than I do it. Oh, is it really about to double? There can't have been no news, right? Come on. Anyone? No one I recognize here, really. Mall names drop. See what I mean? No, there's been nothing. It just went up. Oh, they announced they beat by so they beat. So okay, so it was front running a little bit. That was the beat. But it was already at $5. It was at $5, and now it's like. But that's the thing. Sometimes these names run up ahead of earnings, and then they beat, and then it's like, all right, it already ran up, so they run up into it. That's the whole like, was it buy the rumor, sell the news, that type of thing. Oh wow, so that's a big beat, huh? Oh, I like that. Now this is okay. Now we got. I mean, who know non-GAAP EPS beat. Probably gonna see this with GameStop. Everything. Just looking at it so much with these videos. Revenue down 50% year. Whoa. 48.3%? How can that be? You're kidding me. 48%? Wow, that is a big drop. Sure, COVID, yeah, including retail and wholesale clothing and constant. Wow. Okay, gross margin was up. See, look at that. I like that. I like that. You know what I mean? Like your revenues are collapsing before your eyes, and they grew gross margin. Not much, but that's it. They're making it's a statement. This looks interesting. Now we can wait to maybe it's not an imminent buy or anything like that. But now we're in like, all right, what if it pulls back? That's the thing, and it may pull back because the whole market's pulling back. You know what I mean? And that's where you have these tremendous opportunities. That's why it's important to always be doing this. And then when you get something like the COVID pullback earlier this year, it's like you're ready to run. That's the thing. So there's never any real end to this tracking stuff. I guess I'd be a little bit curious about their outlook. Do they have an outlook? Balance sheet summary. Yep, I agree. That's the summary. Total to 200, including 170 million. Yeah, okay. I thought for a second there was a revolver there. I included the revolver in calculating my enterprise value for GameStop. I feel like that makes sense. Second quarter inventories at the end of second quarter. So they're okay. So they're cleaning out their inventories as well. Not providing full year guidance. I mean, no surprise there. Currently anticipates the third quarter will decline in the range of 35 to 45%. Wow, really big declines. Oh. And then the question is, where does it stop, you know? And they do not have, you know what I mean? Like, this is why, sorry, I see a lot of analogies here to GameStop. This is why I keep on bringing up GameStop, but it's there's a lot of similarities here. I mean, these are bigger drops than that, and that's surprising to me, but the backdrop for this company is not so much. I'm going to compare the two. I mean, GameStop, you have a backdrop of thriving gaming and stuff like that. Plus, there's a huge console. There's a major catalyst upcoming that everyone agrees will boost the operating performance of GameStop. And then it's just a question of for how long and all that. But you don't get that with so many other retailers out there. And so when I see these numbers, I'm much more concerned than the whatever it was, 30%, 20% decline in GameStop, or whatever it was, because it has a potential catalyst. So here, I have to say, I'm a little bit more like, I'm shell-shocked. Do we have the fundamentals up? Let's just take a peek. You'll see. Watch all this purple and green. Check this. I always talk about the purple and green, right? Well, there was purple and green. All right, so that ended. Oh, look at this. Why is this quarterly? Let's go. Let me go. I fixed this last time. Let's see if I can do it again. Why is it doing that? Domestic common. I think I can do this, right? Sometimes it has the weird meta. Come on. It has like a weird meta category, which throws off the report. Domestic common is one that I don't have. Did that not work? Oh, domestic common stock. I had a feeling. Boom. Got it. Let's go. Look at this, $2 billion in revenues, though, huh? Kind of surprised. $2 billion in revenues, really? Big company, for me. But rapidly declining, huh? 50%. What a rough quarter. I mean, I know all that's going on too, but tangible book $4. That's the thing. So it was trading at 75% of tangible book. It looked much more compelling. Look at this. It earned. They bought not much, so we can use this. They bought back a little bit of shares. What? Just under 10%. Excuse me. They bought 10 out of 6. All right, so between 10 and 20%. But look at this. It was earning $7. It was earning $7 per share. You believe this shit? That's what I mean. This is my type of company. I know now. Here's the deep value investor coming out in me, right? I mean, look at this shit. $7. You know what I mean? Like, this is what I was seeing. This is what we did during another stream, right? Let's look at the company right here. It looks terrific. And I blah blah blah, past the performance, blah blah blah. I get all that. It's not. But then we look at this. See all this purple and green? That looks good, right? Strong equity growth. But then you just look at the sheer size of historical earnings, and you see that they were earning $6, $7, and then it's trading at $3. You don't need much to go right. You just need something to just change perceptions just a tad, and you can just run up. That's what I mean. Now, there is clearly secular risk. You can't be down 48% year over year. So there's we all can see what those risks are, and they're legitimate. But you can see how it could also, in theory, be overblown. It could be. I'm not saying it definitely is, but this is the stuff that sticks out to me. And I see it with GameStop because we're making this comparison between the two. But when you see, and I made it with FET too, in that when I was comparing FET, like, you just look at how much it earned that 1 year, 2 year, or 3 year average. These are all 3 year averages. And there was a 3 year average from 2013 to 2015, or let's even go recent, 2014 to 2016. We're at $5 per share in 1 year. So now it's clear what the thesis is. We just need to make sure, and maybe we won't, maybe we'll fail, but we just need to make sure there'll still be demand for these fossil watches looking out 3, 4, 5 years. Maybe that's not the case. I'm not saying that's the case, but you can very clearly see what risks you have to parse. And when you see this historical performance, and then with like an FET, it's more they also have some debt that they deal with, whereas Fossil doesn't, right? They have enough cash to pay off all their debt and so forth. It's just not an imminent risk right now. Sorry about that. So now this is looking kind of exciting to me, right? I mean, I like it more at $3. I like it more at $3, and I wish I kind of pulled this up back then. And then if you look at the cash flow too, I recall this. Look at the cash flow. So you're looking at earnings, and you're going to see major write-downs and all that stuff, right? But if you look at just simple free cash flow, and as a reminder, oh shit, I'm blocking it. Let me switch. Simple free cash flow, just and this is good because I think I mentioned this in one of those tweets. It's just operating cash flow minus capex, right? It's basic shit. And you have true free cash flow analysis. You need to adjust it and all that. But this is always a great starting point. And then you see, even right now, it's still earning. It was still generating simple free cash flow of $2, $3 past couple of years. Over the past 3 years, $3. And so this looks interesting to me. And I feel like this is a classic deep value stock too. So now you can just categorize me as like of what I like to see in stocks. But I mean, I don't know. Net cash flow, same thing with net cash flow, right? Even more. Oh, I'm kind of blocking a little bit there. Net cash flow, a little bit more conservative, because it takes operating cash flow, subtracts everything in cash flow in investing, which could include acquisitions and stuff like that. But even that's still $2. I consider it a little bit more conservative in my mind. But even that's $2. All right, let's pull up the cash flow statement. Shit. I don't know if $5 though. This looks super cheap. What's the chart? What did it do again? Shit. You can see what I mean. Look how high. Look, it went up to $25. I forgot it was that high. I mean, and then you can kind of, I'd agree with, kind of forget about these highs. But still, some people are going to notice this type of stuff. That's what I mean. That's why I mentioned some technical analysis shit in that latest GameStop video, because I don't care so much about this, but other people do. And if those people start piling on and they see this stock used to trade at $100 per share, I know it sounds ridiculous, right? I'm a value investor. I get that part. But I'm just saying other people take note of this stuff. And you are curious about what that 10-year high is, or the 5-year high, or the 52-week high. And even in less than 2 years ago, it was trading at over $20. You know what I mean? So that's what I mean. It was more compelling at $3, less so at $5, given that we just saw 48% year over year. But nevertheless, we'll pull up the cash flow statement super quick. Are we here? This is the 10Q. Oh, you know what? Let's pull that up while we're here. We'll pull this up real quick. Just take a peek. I've definitely done this before. Now, I'm surprised I don't know more Fossil, because I looked at Fossil like before March and April, and I thought it looked interesting. I might have looked back. No, I didn't look back there. I looked here, and I probably bought some, and I got my ass kicked by it, right? Because everything went down. But I didn't buy as much more, and it was almost because it had such a strong balance sheet, which is silly. I know that, but I felt the upside might be somewhat limited, which, as it turned out, was at least partially true. All right, let's check this. Oh, good, I'm on this side. I'm not blocking it. All right, let's just check. So this is through 2019. We're missing a really rough 6 months here, right? Just doing a quick sanity check on this. So you see some kind of fat stock-based compensation, right? It's operating cash flow. Yeah, I mean, that's not that fat. You see 30, 20 million, but operating cash flow is closer to like 200 million. And then you had, well, how come it was down so much this year? So they had a gain. Was it just working capital? Okay, so accrued expenses, that had a huge drop this year. These are always going to be lumpy, right? This is working capital. Some years are going to be, it's always going to be lumpy. That's why you always got to take the average of these types of things, because in 1 year, like, you just had this happen with GameStop. Jesus, how many times can I make that? Let me take a drink. It's just because it's a good comparison in this case, where they're trying to improve working capital management, right? So they might be doing some moves on accounts receivables, or paying down accounts payables, or trying to get rid of inventory, and so stuff starts moving around. That's why it's very important it's lumpy. So you look at averages, that's all. So just when I'm seeing this, you see this big outlay, 150, but there was also a big inflow, 150 for inventories the year prior. So let's see here, the non-cash lease expense. Anything sticking out here? Goodwill, look, a huge goodwill impairment back in 2017. Wow. And so they had a gain for the earnings right there. Not too much is sticking out to me. All like boilerplate stuff. Remember the balance sheet, I like super simple financial statements. And balance sheet's super simple. This cash flow statement looks pretty damn simple too, right? You know what I mean? You got some markdowns. That's going to be expected in a retail environment. The goodwill impairment, that's going to continue happening. Non-cash restructuring, bad debt expense. And these are all small. You don't even need to care too much about the small stuff, right? I mean, if you're dealing in 200 million plus in operating cash flow, I'm sorry, but 3 million? It's not that big. It's not a thesis change. You can focus on the big fat items. I don't even really care too much about this gain at this point in time. So it's more. This is more just some working capital type stuff that's happening down here. And then let me just check the sheer level of revenues. I like to see that stuff. Just year-over-year revenues. Oh. That's not as much as I have. Wow, it's a really bad year for them, huh? 48% year-over-year. This isn't that rapid. This is big. These are big declines, but that's not rapid. Boy, what a rough year, huh? No one's... Why? I mean, no, it's kind of a luxury, a little bit. I mean, I know Fossil's not crazy expensive or anything like that, but who would buy a watch? Plus the competition. But, like, smartwatch competition... And plus, do they have... I should know this. I think they have smartwatches. They've tried to go down that path, but there's serious competition now where they're secondary or tertiary player at this point. I feel confident about that, although I'm not certain. But how big is this drop? Sorry. Get the graphic calculator, all right? 12%? What? Did they sell that? Did they sell a part of their business? What's going on here? Where am I? Was there an asset sale? So I got this column, this row right. Where the hell's that row? Even I can't find it. Retained earnings. Right here. No, wow. That is such a rapid. So I've been like, as you've been looking at how companies have been performing in Q2, right? I've been trying to take note of which ones really are getting pummeled by the current environment. And this is one of the worst ones. If you have other examples, please. Sorry, someone commented. My bad. It was getting blocked by my damn thing there. GME normalized free cash flow for 2021. I'm on. Oh, sorry. I thought it was gonna be a little false. We'll talk about GameStop. Good question. Normalized free cash flow for 2021. So that's a good question. I guess we'll do a quick. I mean, I got a comment here. I got a question. Let's roll with it. How long ago did you ask? I don't know. Oh, it doesn't tell me the time. But somewhat related, I'm doing so many damn comparisons to GameStop here. So off the top of my head, I don't know off the top of my head, my big thesis, a big part of my thesis with GameStop is it's going to be, what do you say, 2021? So not this year, but next year. It's going to be at least a couple of $100 million. That's what I'm thinking. And I even think that there'll be, I think there's a great chance to generate positive free cash flow over the full 12 months for this year. I think that's conceivable, especially with the asset sales. Remember the asset sales with the sale leaseback that they're doing? That's going to generate real cash. And I think that's the big asset sale. You know what I mean? But if you're talking strictly operations, which is really important, right? If you're trying to estimate the value of the business itself, it's the operational cash flow that you'd be curious about. But this is the thing with the $300 million market cap and all this cash they have in the books. Really, if they can just generate 3, 4, 5, 600 million in free cash flow over the next couple of years, it's super, super cheap relative to that. Now, on a straight 12-month basis, I could totally see them generating upwards of like 300, 400 million in a 12-month period. I'm not saying that's my base case or anything like that, but it almost seems like people have completely written that off as in it's not possible. But that seems nuts to me because of the cost. Because of the reining in the cost that they've been doing over the past 12 months related to gross margin and related to SG&A. This stuff they've been doing this for the past 18 months, right? The new management team. Forget about the old management team. Forget about the shit that they did. But this new management team's actually been making decisions, improving working capital management. They're doing all these small things, de-densifying the stores, blah, blah, blah. You know all this, right? You know all these things. Now they're going to come to fruition right at the time that these consoles are going to be released. It's true. It really is conceivable. Oh, I have it up here. Sick. I get the fundamentals up. I'm sorry if people dialed into Fossil, but we got a legit question on GameStop here, so we got to roll with it. Sorry, what was I just going to pull up? Oh, just the cost management here. I was going to pull up. Is this GameStop? Through May, yeah. So we saw gross margin increase. Like gross margin is already increasing despite that huge revenue sell-off this year. It's just crazy. And SG&A is still inflated. I know a lot of people point that out. Even I pointed this out in one of my videos. If you look at SG&A margin right here, you can see this, right? Let me highlight the row. It still looks fat, 32%. Big part of that reason is because of the revenues are coming back down, and they're still in the process of winding down their stores. And I'm also curious too. I don't know if you have an opinion on this. But like, does it make sense to keep these stores open a little bit longer because of the new consoles are coming out? I don't have a strong opinion on that. It's just something I've been kind of thinking about. Let me flip back. It's been something I've been thinking about. It doesn't matter, but it's just these are the types of things they're thinking about right now, whereas the past management wasn't. And so my point just being, if people are looking back at historical free cash flow margins of like something like I did this in one of the videos, what it was generating back in the day of and I know this is through. What is this? Wait a second. Oh, I get the same. Oh, sorry, this data isn't accurate. Look at this. So we get the same issue here that we just had for, hold on, let me just fix this real quick. Ah, did they change their thing? I need to do the same thing. Sorry about this. Watch this. Same issue. That'll fix it. Okay. Sorry, I was looking real messy. It was throwing me for a loop. That wasn't even a lot of red for me. You know what I mean? But we go back to, so I was saying 32%, right? But for SG&A. So it is 32%. But look at you see a huge leap up right here, right? That's what some people are paying attention to. But I think this is like a little bit deceiving because we know that they've been taking action. We know that revenues are going to, I mean, hopefully most people would agree with this. Revenues are going to jump quite a bit next year. And so this is what I'm getting at. They're reining in a lot of these costs, and they've had about a solid, it's going to turn out to be 18 months, which isn't that long. Really, it could take 2 years, 3 years to really get it, but that's okay. And so this is going to increase what historical, I don't know if it will increase, but you see what these historical free cash flow margins were back in the day. Simple free cash flow, right? Operating cash flow, less CapEx. We're looking at like 5-6%, right? And so now people go, well, they're not going to generate any free cash flow, but I'm really not so sure. I think when you get this big revenue jump up, maybe you don't get back to 8 billion, 9 billion or something like that, but if you stabilize at like 6-7 billion and you can even get a fraction of this, I'm talking 1%, 2%, calculate that out times 0.02%, then you're at 120 million. So at just, what does I say, 2% of 6 billion. They're at 6 billion right now. They're at 6 billion in revenues. So then you get to 7 billion in revenues and you're still at 2%. Or what if these costs, reining in these costs can I mean, can you imagine if they get 5% in simple free cash flow margin? Then forget it. And then there's the balance sheet. You know what I mean? So there's just so much downside that it's just the asymmetric upside looks compelling. But for the actual precise 2021, I don't know. I would say, oh, you're going to pin me on this? You just asked a question. I want to pin myself on this. You know what I mean? But really, I can't do anything but give you a range. I would say, if I had, and I don't want to be too aggressive, I think I would say between 200 and 500 million. I would put it up there. Yeah, I really can envision 500 million in free cash flow. And I assume you mean for the fiscal year 2021. So what's that, January through next year? Yeah, and can you imagine? So 500 million for 1 year of free cash flow plus book value and all that. This is why I'm so bullish on GameStop, because I have what maybe other people will consider, I don't want to say delusional estimates of free cash flow, but they're really not that aggressively bullish from my mind. And even at 200 million, you know what I mean? Even at 200 million in free cash flow, and you remember the reduced share count, then you're still looking at, what is that, $1 or $2 in free cash flow on a share price of $4 or whatever it is. Then it's a question of how long can they extend that, which is a fair question. But this is the thing. That's just the downside. And then if they ever successfully, what if they use this console site? So that's like my base case. I consider that a base case. But can you imagine? This is why I try to talk about this prominently in the videos. Can you imagine if they do transform themselves? Everyone says it's a 0% chance they transform themselves, right? 0%? 0%? Would you... Haven't you seen enough in the market? What would you put 0% on anything? I wouldn't put 0% on anything. The market has like priced in like negative percent chance that this is going to happen. Can you imagine if they use the release of these consoles to like have like a more experiential type thing these next few months in October, November, December, even the next 6 months of the first 6 months of 2021, where people like coming in and playing games? I would say that I wish we had heard more about this. Now it's August. But maybe that's what I mean. Maybe we're going to get some continual bullish news on that front over the next coming months with some vendor partnerships where maybe there's going to be exclusive testing out of games or whatever it is within the stores. I'm not saying that's going to happen. You know what I mean? But I can at least envision this stuff, and that's what I try to say in the video. Like, you can't envision this stuff? So if they ever did succeed, and it's not just a question of what terminal value is within a couple, because everyone says they're going to generate, what's your estimate for free cash? That's what everyone says. What's your free cash flow forecast looking at a couple years? And then that's it. That's the end of the discussion, because people say, well, that's all they have left. And then as long as they distribute it to shareholders and don't do any stupid acquisitions, right? Blah, blah, blah. That's not, I don't mean that's a ridiculous thing to say, but that's often the end of the discussion, and that's a mistake when you're looking for asymmetric upside, because it's just such a thriving industry. You at least need to entertain the possibility that they pull something off here with Reggie on the board and this shit. I just think, oh my God, 0%. So when I see something like that, I get really excited, because even if it's 20% chance they pull that off, then it's conceivable that maybe GameStop doesn't get back to 8, 9, 10 billion, and that's their long-term future. But if they can stabilize at 6 billion or 7 billion, and they become the go-to spot for gaming experiences, and then people even start to like GameStop because they're sponsoring their local just gaming environment. You know what I mean? I'm not saying that's going to happen, but it's at least possible. And if that happens, just forget about it, because if you change first of all, the discount rate, right? Everyone's using super high discount rates, even myself. But if you change that terminal value and you say it can grow alongside the gaming industry, which is crushing it, by the way, the gaming industry, you see how fast it's growing, and they're saying it's going to be like 200 billion within a couple of years, like 2023, I think is the forecast, 200 billion in gaming. It's like GameStop can't carve out a small percentage of that. They can't carve out, what do you say? They can't carve out 2% of that. That's 4 billion in revenues. And especially if there's some high margin stuff in there, I just think it's just tremendous, the potential upside. And then it's just a question of what's the probable upside and blah, blah, blah. And then we start talking down. But when I think of this, when you hear my free cash flow forecast, and I'm thinking like it could be 200 million. I mean, people talk about bankruptcy, like that's ridiculous. If you have lower free cash flow forecast for 2021, I'm curious about. I really want to hear that, because I want to hear the assumptions that go into that. Like, do you really don't think revenues are going to bounce? So it's just a huge drop. Look at this. They had 8 billion in revenues through May 2019. 8 billion. Is it that crazy to think they're going to bounce back to 7 billion or to 8 billion in revenues? I don't really know. But if they do, and these costs have been stabilized, then I don't know, 200 million just doesn't sound too. But anyway, I want to see if someone goes, they're not going to make 200 million. They're going to make zero. I need to see your assumptions. What are your revenue assumptions? What are your gross margin assumptions? And what are your simple free cash? I guess that's it. I need like 3 data points. I need like 3 data points to see if you're just bullshitting me based on the secular risks, or if you actually penciled through the numbers. Because I'm sure there's plenty of bright people out there, maybe even smarter than me, pencil through the numbers, be like, nothing. See, I don't know about that. I need to see. I gotta see. But so anyway, I hope that that was a good little just GameStop discussion. If you got any other GameStop discussions, let's talk about it, because I mentioned I added it today, so maybe I'll catch myself in a blunder. I'll be like, oh shit, maybe I shouldn't have added today. But yeah, 2022 gets a little bit more uncertain. Now I'm just thinking out loud now. Of course, 2020 is uncertain too. But 2020, if they generate 50 or 100 million in some assets, I don't know about 100 million, maybe 50 million. That will cover the cash burn if they have. I assume they're going to maybe even have a cash burn this quarter too. But Q4 should be great, and that's when they generate the bulk of their free cash flow. And but 2022, that's tougher. I'd skew lower, but who knows? There'll be, I don't know. There's just so many damn games. Did you see this? I think over 40 games coming out alongside these consoles. I mean, that's twice as much as they had at the last console cycle. And I'd be curious in your opinion on this too. My take, talking to family and friends, and seeing the headlines out there, is that I don't think these consoles are necessarily revolution or anything like that. But isn't there more excitement? This could be confirmation bias. Let me just talk about it. I feel like there's a little bit more excitement about these consoles because Xbox One and PS4. Maybe it's because Xbox 360 and PS3 were just so hyped up. You know what I mean? They're some of the top selling consoles of all time, and like they're terrific, right? And then it's like Xbox One and PS3, like PS4, like all right, yeah, okay. And now, but do you see some of the graphics on some of these new ones too? And I don't know, this is just opinion that the thesis isn't pinned on or anything like that. But I think this seems sick, doesn't it? Doesn't it seem like this is gonna be great? And then they announced it earlier, and then there's gonna be all these games coming out with it. I could see there being more excitement around this and getting people energized about it. But so I don't know. But I wouldn't say that it's gonna be bigger than the other consoles. But I don't know. It makes me think that the free cash flow could extend for a couple of years. And again, that's really just that's supporting the downside. And then I just think, all right, so I feel super covered on the downside. And then I'm much more curious about the debates about what that upside is. And the arguments against that are better, I feel. The arguments against the downside, I feel kind of silly. Okay, now I need a drink. But that's why I'm curious about people's numbers. Anyway, we should be getting some news soon, so we'll see. And I'll be curious what this updated book value is. It looks like they sold those warehouses and distribution centers based on, you see those online listings and stuff. It looks like they've already been transferred. Who is it, to Brookfield or something? It looks like they're, anyway. It doesn't show the dollar amount or anything like that, but we'll get that. I mean, we could get that before earnings, but regardless, it could be it could be dealing with a higher book value, because they might net a gain on that as well, and then and that will be cash, and then I don't know. All right, okay. Anything stand? Sometimes I'll look at a company, right, and I'll take a break, and maybe I leave. I just go somewhere, and then I come back, and then something else catches my attention, or so a new thing lit up that I didn't see before. Now I've looked at this damn sheet so much. Hey, Christian, cheers, mate. Thanks a lot. That I don't think anything really sticks out to me, but I guess the share cut. You imagine the share cut. What if they bought back more on? I don't think they will. They got 100 million left. Oh, I meant to include that in the video, and I forgot to. Maybe I mentioned it. I forget. They still have 100 million in authorization. They could take the proceeds from the sale leaseback and buy back the 100. But now it doesn't say. I don't know. Can you imagine going into the console refresh with 40 million share? Oh, now at this point the price is getting bid up, right? How much could they actually buy back? They got 120, I think, left. Wow, that'd be sick. I haven't seen enough volume. Have you seen enough volume on this? I was watching this for a while. Like in there was 10 million on Friday, right? I mean, and clearly that was because the GameStop video was released by Roaring Kitty. I'm just kidding. But like that's a lot of volume for a random ass Friday, right? But everything else has been really quiet. You know what I mean? And since then, you had a big update on August. But really not much. So plus the sentiment. If you read through their presentation, sorry, now this is a figure that just caught my. This is what I'm talking about. Then I started thinking through. If you look at their presentations, management sentiment is really like they're done with the share buybacks and stuff. And I know Hester and Permit got on the board and stuff, but I don't think that's going to make much of a difference. But at the same time, then I'm thrown off because you see how much they bought. See how much they bought last year? Q4, what was it? Like September, October, November. I was surprised. I even thought back then that they were doing the right thing. If you remember too, the conference call, I've said this a number of times in the stream now, but it still kind of confuses the hell out of me. They announced on that conference call back in May or June or whatever the hell it was, 2019. They were like, we're not doing any buybacks or something. And then like 3 days later, they did the Dutch auction. Like, what the hell? So that's what I mean. I think management has been doing a lot of the right stuff over the past year and stuff. But then I think some stuff confuses the hell out of me. And they were like, we're not doing any. I could have sworn I should pull up the conference call, or maybe you remember, but they said we're not doing any buybacks. And then the stock price collapsed and they cut the dividend and blah blah blah. And then they did the tender offer. Well, why did you even do the tender? Why'd you do the Dutch auction? Excuse me, like buying back on the open market. So first so it was real messy. Then I was like, I haven't had as heavy of a position as I do right now back then, because I was when they announced they weren't going to do buybacks. I may have just dabbled, but I'm like, oh, if you're not doing buybacks, I'm not interested. Like, you have to do the buybacks. And then I know Hester and Vermont had written some letters prior to that, and then Barry wrote his letter after that, and they were right. You need to do some of the buybacks. And so then they changed to, and they did the buybacks, but they did the Dutch auction, which was super weird. I still don't understand the Dutch auction. If someone can get some clarity on that, I'd be super curious. And then they didn't buy back after that. Like, I was like, oh, maybe they're going to keep on buying up. And then Barry wrote his letter. I'm like, all right, maybe they're going to listen. Maybe they're actually going to take some action here. This could be sick. Then it could truly be now it's crazy. This was a year ago. What's the date? Oh, it was a year ago today, wasn't it? I remember being excited that Barry wrote that letter because once they announced the Dutch auction, I had been building a position in GameStop. And then he announced it. I'm like, all right, I'm not totally crazy here. And then I'm like, all right, maybe they're going to start buying back. And then they announced Q2 results in mid-September. They hadn't bought back. And I'm like, what the? Whoa, how did you not buy back? And then, but then they said some things. I'm like, on the conference call, I'm like, all right, maybe. That's the thing. You read these conference calls. I'm not always reading the conference calls, right? But if I'm heavily dialed into a position and you really care about what's going on, if you have a super concentrated portfolio, which I sometimes have, not right now, excuse me, except for GameStop. I'm reading anything that it's published on the internet. I'm reading. I don't care where it was posted. If it's publicly available, I read it. And so I'm reading the conference call, trying to parse like their sentiment and stuff like that. Are they going to take action? Are they going to do that? And then I'm trying not to place too much confidence in that, right? But I'm doing it. And then I'm like, I don't know if. Then I remember going into the Q3 in December. I'm like, I don't know what they're gonna do. I really can't get a finger take the pulse of it. And then they bought back a shit ton. It was a terrible quarter, right? it was like a worse quarter than everyone's expecting. I think myself included. But they bought back a shit ton. What'd they buy back? 20 million or something? And I was like, holy shit. Then I got super bullish. Then I'm like, all right, now because at the time, what'd the price do? We'll come back to you, Fossil. We'll come back. Although I don't know how much more there is to talk about it, because I need to dig into it. Sorry, I got to check this real quick. It sold off, right? It sold off. It was at $6. It sold off $5. I was getting really booked. Here we are. It's August. It's below where it was. And we're not even right at that level yet, huh? Then I was like, oh, I'm getting bullish now because I'm getting really bullish because holy shit, management is aligned with us. First they said no buybacks, then they did the stupid ass Dutch auction, and then Barry wrote his letter and they didn't seem to be doing anything. I know there was like quiet periods and stuff, blackout periods and like that, and so there's probably some truth to that. But then I remember reading the comments, I'm like, I don't know. They said some things that I'm like, all right, they kind of, I wasn't confident. But then they did that, and I'm like, I care more about the actions. Just like when you're watching this stream too. When I actually do something, like I'll take a lot of notes and I'll say a lot of stuff, and I do this to myself too, where I'll think something or I'll do something. But if I actually do it, it holds more weight with me. This is why it's important to take notes and tag stuff, because if I tag it or if I do it, it means like, all right, I weighed the decision, I thought about it. Anyway, when GameStop actually bought all those shares, I'm like, all right, they were aligned. We're aligned. They're on board. They seem to be doing a good job cutting costs. They're saying the right stuff. Let's do it. And then and then COVID happened, right? And then which it interferes with their social plans, right? I mean, there's no denying that. We talk about the upside, right? Let's talk about how social distancing can impact a company that's trying to become a social blah blah blah. That's not lost to me. That's real. But and then so then I've been reading closely, following. Then they stopped buying back shares. They haven't bought any. They bought back a nominal amount in Q1. Then they didn't buy any in, like, as it turned out though. I regret they were right. I thought when they announced in January, they did that holiday results or whatever, and then they didn't, not that they needed to announce any, then they announced in March, and that was like, and then all this happened, right? And I was really happy they didn't buy back shares. I would have been, Hester and Permit, I don't know about Burry, but like, we would have been, the thesis might not have failed per se, but would have been much riskier. It would have been, and here we are, the price is still lower, right? But the GameStop management kind of mentioned this in their presentation. It would have been a tougher environment right now. But when they announced in March and they said they didn't buy back shares, I have to say I was a little bit relieved, just because at the time too, this was March, what was it, 26th, 27th? Who the hell knows what was ahead? I mean, your stores are literally closed. And I'm like, I'm sure shit glad we get the cash on the books right now, because if they had exhausted that extra $100 million, it would have been tougher. It was only $100 million that's remaining though. That's the thing. And so, but even still, all else equal, I'm like, I'm glad we got that $100 million right now. And then we'll figure it out after. We, as in, like, I'm part of the board. What the hell? And so that was March. And then they announced when they announced. And in June, they didn't buy back any. But then I was really starting to, like, they're probably not going to. I was really starting to pick up on the sentiment. They had that presentation, that GameStop presentation that I referenced in the latest video, where they we're done. They made it something like, we completed the share buybacks, when clearly the authorization wasn't exhausted, but maybe in their minds they were completed. So I've been kind of getting on this, like, we're not doing shit. We're focused on the bonds. They said that in Q1 too. We're focused on the bonds, and but now the bonds are behind them. You know what I mean? Like, they've successfully refinanced to a degree, right? They did that exchange. It was a success. As far as I'm concerned, it's borderline a resounding success. I'm not totally sure if it could have been, maybe it would have been better if they all exchanged. I'm not sure. It's like, I'm not a bond expert, not a credit expert per se, but from my perspective, they got rid of those covenants and shit, top notch. And then they have enough cash, plenty of cash, to pay off the 2021 debt, and excuse me. But and then they extended the other debt, so I feel as though they're in a great position where now it's like $100 million. Now they've forecasted liquidity of 560, 570. They still get the revolver that maybe will be paid down by now. What was that, 130 or something, 135? But and then you get, I have no idea how this tangent started. But then you get, so they forecasted 560, 570, and then that guy Justin on Seeking Alpha said he reached out to the board. And they said that it wasn't including any proceeds from the sale leaseback. So in theory, that could be an extra anywhere from 30, 40 million to 100 million. I have no idea. It sounds like they're really high quality assets, though. They may have had enough from the sale proceeds themselves to go buy back, to go exhaust the authorization. So that's what I mean. So now I'm trying to think, like, I feel as though they have the financial situation and we're close enough to the consoles where they could pull the trigger on it. But now I'm not sure if the sentiment is there anymore. Maybe with the debt behind them, and they did go aggressive that Q3. If they hadn't gone aggressive, this would be a different story. But they did go super aggressive that Q3, and they said on that conference call. Now I'm thinking off the top of my head. I think he said something. I remember I was listening to it. I was listening to it in my car actually, and can you believe that I was listening to the damn conference call in my car? I was really like, all right, let me tune in for that. How ridiculous is that, right? Nerd alert. And he said something like, someone asked a question. I've since read it in the transcript and stuff, but someone asked a question like, hey, what are you doing buying back all those shares? What are you doing buying back all those shares? Like, what the hell are you doing? That was the gist of it. And I think it was Sherman. Sherman was like, we know what we're doing. Almost like, we know where we know where we're going to be trading a year from now. Or said something like that, which I thought was like, geez, even I don't know if I'd say that. I don't know if I'd say that on the conference call, but I was like kind of surprised. I was a little bit surprised he framed it like that. Like, we know where we're going to be trading a year from now. We're not crazy. We know what we're dealing with. And I thought, hey, cheers to George Sherman, because that's what I thought too. And it means a lot for them to take action to buy it and to say it on the conference call. Now, since then, they've truly dialed it back quite a bit, where I'm kind of like, all right, we'll see. But because they've been doing a lot of the other right stuff, and then you saw Burry supported them on. Sorry, we're looking at the chart here. I should have this up. I've already supported them too, and I agree with this. I agree with it. They've been doing a lot of the right, enough for the right things where it's not a big deal for me whether or not Hester and Permit get those board seats, especially because it's just a couple of board seats, and they had done so much up to that point where I'm like, it's okay. They're doing a good job in the cost management front, but now I'm back to the capital allocation standpoint where I'm like, well, what are you going to do? What are you going to do? And also, we haven't heard many material announcements on this transformation front. It's been very quiet. It's been very bond focused, for better, for worse. I think for better. I think it might be deliberate. Like, let's focus on the bonds, and let's get this final, could be a questionable quarter behind us, and let's start moving forward. So, but anyway, bear that in mind. If they go into October, November, December, or they come out with 40 million shares, and they can buy them back anytime, but they're likely going to generate a shit ton of free cash flow over the next 6 months. And you see the balance sheet as it currently is. We'll get an updated one in a couple of weeks, but that type of setup. And this is the thing. This is the share price. This is the thing. This is what probably irritates a lot of investors is you are not guaranteed to have this. You can't you're not guaranteed to be able to buy back 5 forever. Maybe, I mean, so far it looks like I've been wrong, right? I mean, that we're still trading below 5 in August 2020. I look like an idiot. So that's right. So there's at least some there's a case to be made there. But I think if you once you're taking care of the bonds, and as long as your liquidity situation is good and you're really close to the consoles, and the price is still below 5, you got to do it. Do it now, or what do you? That's the thing. I feel like it's going to be a busy next couple of months, and if so, and I feel like the next move is the next 50% move is up, and then it's like I hope you're doing it, or you're gonna do it, or I just hope the opportunity is limited, and I hope they don't lose it. But yeah, we'll see. I don't know. There's so many nuances here. And there's a lot to be wrong about. There's a lot to be right about. It's a great battleground stock, right? That's why it's a big position in the portfolio. It's why I've been focusing a lot on. But hopefully you can tell, right? I mean, I got so many other damn positions. And GameStop is now the biggest one, blah, blah, blah. But it's just fascinating. It's fascinating. We'll see what happens. I certainly hope it works out because you don't feel so crazy about everything. But yeah, we'll see. But anyway, can you imagine? I mean, what did I say? 200 to 5 million? I just pulled that on my ass, by the way. I haven't picked through like precise forecasts. That's not my style. You'll get this. But I'd say I feel like that's roughly in the ball. 500 sounds a little bit high, but I don't know. They could kick ass. That's what I mean. I like to leave a little bit of opportunity on the upside. But anyway, let's use 200. 200, I feel, if they didn't generate free cash flow of 200 million in fiscal year 2020, I would feel as though I messed up. That's how I feel. So let's use 200 million. So that's what I'm talking about. Let's say they get 200 million, right? And they get down to 40 million shares. That's $5. That's $5. That's $5 in free cash flow in one 12-month period. You know what I mean? And then you get like, could that persist for a couple more years? And then the upside, if they can successfully transform, like what the hell? You know what I mean? Like, and so those are the things that go through my mind. And so you ask a good question. That's such a pertinent, relevant question. But there's all these other variables that kind of weigh on me. But what if they do this? What if they do that? What if they successfully transform? What if? I mean, I don't know about selling Game Informer. I also don't know how much they'd actually get. But you know what I mean? And then they raise cash all these other ways. And this is where security analysis differs. So many people out there, when it comes to GameStop, they're doing like business analysis, and because they're like everyone knows the secular risks, but like security analysis is different. Like we're trying to figure out what this stock is worth. You know what I mean? When you're dealing with the security itself, like the share repurchase, capital allocation weighs in on it, and then business decisions. I don't know. Everyone just kind of writes it off. They just kind of accept that the past 3 or 4 years is representative. I feel like they may be making a mistake. You know what I mean? Like I pull up these historical fundamentals and I go, past performance isn't indicative of future performance, blah, blah, blah. But I feel like some of the bears might be making the same mistake where they see this revenue trend and the free cash flow trend in the chart, and they think, this is going to continue. And I think, maybe you're right. I'm not saying you're definitely wrong, but I think this is one of those cases where the chart, this really ugly, this is dividend adjusted, where this is misrepresenting what's unfolding underneath. And I think people, I don't know. I don't know. I don't know. I don't know what to say. Maybe I'm wrong. Maybe, I don't know. I like having company with Bari though, and I don't think we're wrong. So that's the thing. I'm never too afraid about being wrong about something, and it would make my analysis look. I mean, those are the first couple of videos I rolled out, right? And I'm its biggest position in the portfolio, blah blah blah. But I'm wrong so much, being wrong is part of the game. But in this particular case, it's always an opportunity for education, right? That's a big part of the stream, a big part of my positions generally. I always feel as though, yeah, I might get my ass kicked on something, but I'm learning along the way, and I say in one of my videos, the me of 5 years from now is going to look back at what I'm doing right now and be like, what the hell is that? But that's a good thing, right? You should feel the same way. It's like, that's growth. You know what I mean? That's growth. So, I mean, I have like high conviction things, but that I could be wrong. It's not lost to me. It would just be hugely educational for me. This would be a big educational lesson if I were totally wrong. I don't mind being wrong about major upside or anything like that. Like some people talking about it going to like, I mean, that's the thing. If some people talk about like going back to like $40 and $50 now on a market cap basis, what's that? What's that? $3 billion? It's not crazy. If you saw in the video, I made sure to make this clear. The max market cap back here was oh shit, I forget. What was it? 6 billion? 6 billion market cap or something. But with the share count that could be halved, right? Then if we got to the same share price, it's only half that, right? Obviously, but even I mean, I don't have much conviction. I talk about the possibility for transformation. I'm just trying to do weighted average possibilities, right? Weighted average probabilities, weighted average outcomes. And like, you can't assign a 0% to that. You can't. You don't need to. I'm not assigning a 50% chance to it. I'm not assigning a 40% chance to it, but maybe in the 10 to 30%, maybe 30, I don't know. Maybe 10 to 35% chance, just because gaming is so kick-ass and they're really the only major retailer dedicated to it. I don't know. It's definitely possible. So anyway, but so I wouldn't feel bad if it doesn't get to here, but I'd feel kind of surprised if we don't get back to 10 to 15. I definitely messed up something, or I overestimated certain things, or I underweighted certain things. Like I do that all the time. You're gonna see me make mistakes. So far, everything's been working out in my favors, but for the past 5 months or so. Yeah, we'll see. This is looking good though, huh? See, this is what I'm talking about. Sometimes it's usually fundamentals, but even the chart. I made sure to include it in that video. What's this, monthly? This is kind of bullish, right? Boy, it's not bullish. It's not bullish. It's just not as bearish. You see the RSI getting out from oversold range, and it's not bullish. But in this chart, isn't bullish. Although it's doing a base. This is what the books say, right? I'm a deep value investor. I've been probably trying to get into charts like the past I don't know, year, 18 months or something like that. So what you see me do here, I'm just like, I guess, I don't know. So I'm not kidding when I say, what do you say? But I feel like people stop here, which is an edge for value investors. This is why I think it's so helpful to use both, because it does seem like there's something here, and it's a good manifestation of psychology and the fundamentals unfolding. I see it kind of be useful over and over again. So I use it as a supplemental tool as part of my Clearly, it's fundamental analysis I'm doing, right? Clearly, it's fundamental analysis. So I spend a lot of time in this stream, like looking at charts and shit, and I'm like, all right, I hope it's clear that I care about the fundamentals. But okay, so that's like, can I pull up weekly here? I've been doing this I was doing this because for the video. Okay, so we're over 50 on the RSI here, but it's not bullish per se. But the trend is looking up. That's what I'd say. This isn't bullish. Look at this. It was hugely oversold last year, right? Crazy oversold on a weekly basis. But then it never even got oversold in March, everything was oversold in March and April, wasn't it? And then it never even got close this past. But this is why I was buying quite a bit, and I mentioned this on the stream, right? I bought quite a bit right here. I'm like, oh, this looks great. Below 4, I was buying a ton below 4. I mean, I already had a ton, right? Relative to the existing position, and it's turning out. It's turning out right now, right? 6 months, maybe I look like an idiot, but I say that all the time. But this still looks really good right now, right? And then on the daily, how about the daily? Right, this is when things are going crazy. This looks so... Look at this. I do this sometimes too. I see some technical analysts like draw these lines right there on the RSI. Like, what? I guess. I don't know. Is that a thing? Like, can you do this? Can you do technical analysis on the RSI? People do it. I hope you don't think I'm mocking you, but I have no insight. I mean, I do this. I'm saying I do it now, but I'm like conviction-wise, I don't know. I don't know what that'll do it. But I see this, it's not getting sold over much. And so much shit has happened here, right? Look, this was on the daily. It never got oversold. It got oversold in early 2020, and I was buying. As it turned out, I thought, and then I'm like, oh shit, I was buying too early. It turned out I wasn't buying that early because it held up really well in March and April. Like relatively, it was crushing. It was crushing all the other positions, and then it got sold off briefly here. But this is I'm almost willing to overlook this. Not overlook it, you know what I mean. But you see the RSI, like it didn't hold up, and so look at this. This has to be one of the few stocks. This has to be one of the few stocks that didn't get oversold. That wasn't the most oversold in March and April. That it was actually up. There can't be that many stocks like this, right? Maybe maybe some healthcare stocks were kicking ass or something like that. Now you got me thinking. Doesn't matter. What does it matter? Now, so I bought today, right? I still feel as though this is a good setup. I feel as though setup. Now I sound like a trader, right? I mean, obviously we haven't gotten news, right? So this is what I like to buy when there's no news and like the stock, not just GameStop, any stock. It's just tracking the market, and it's kind of just like there's no news. Everyone's like, oh, I don't know what to do with this, and then the market will sell off, and it kind of just does nothing, and everyone's just bored with it. Like this is a classic roaring kitty buy right here. Like, oh, this is great. And now no news is out. Now it's up. It's almost up, almost damn 20%. But now I feel as though now we're getting so close. Like news could be imminent, and we're just getting so close. I feel like I'm running out of time. I can't. How much more can I add to it? I really can't. Plus the options. Forget about the options now. I mean, I have options, but they're in the stratosphere. I mean, they're just so damn expensive. They're so expensive. You got the VIX at 22. I talked about that, right? And they're just so expensive now. I can't see anything. I can't see anything super compelling. And I'm super bullish on GameStop, but I'm just like, I mean, I'm glad I got the ones. I said this for a number of positions, for a lot of my options positions. I'm like, I'm glad I got the ones that I do, but like sometimes you want to add a little bit more. I'm just like, I can't do it. I can't. And I see that with like I was looking at them today because I was pulling the trigger on the stock on the for the Roaring Kitty portfolio, and I'm like, how are these options looking? I'm like, oh my god, you ever just turn away looking at the options prices? I do. I'm like, I can't. How dare you? How dare you? You know what I mean? I'm talking to the sellers, right? The people who got the asks out there. I'm like, how dare you think that I would pay that? But people will buy, right? I mean, I guess that's the hope with the GameStop. These are the ones I have, is that this is often the way these options plays work, is that you buy them when no one wants them, right? Obviously, either it's in a huge sell-off or even it's really quiet and stuff. That's what I was buying them here. It's really quiet, and then but then all of a sudden people will want that security. They'll want that call, and suddenly it's in favor, and people will pay a fat premium for it. But that's what I mean. GameStop's not up right now, so I'm kind of surprised the premium that some people are paying for it. But we get it, right? There's a lot of shit going on. So yeah. But I haven't really dialed into the daily one. It's not quite overbought. It hasn't been overbought since when? Oh wow. See what I mean? Like, I see what I mean all the time. Like, you know what I'm talking about. I jump all over the place. I don't even know what I mean. But I'm just saying this is a good setup. It's like, it hasn't taken off yet. I mean, it's below 5. Of course it hasn't taken off yet. But I just mean, I'm buying it like it's up 10 or 20% from when I last bought it. But this, you're always averaging in, right? You'll drive yourself crazy if you don't average in and average out. You have to do that, unless you're the luckiest person in the history of the world, right? Which I am not. I mean, I feel very lucky with a lot of things, but I don't have the type of luck where you can always time the top and time the bottom, blah, blah, blah. No one does. But, so anyway, this looks good, though. This looks good. Where were we? GameStop, any final thoughts on this? No, now I'm going to be curious about what that book value is, too. And I was surprised. You know what? One thing I was surprised about? When Burry mentioned in that, now we were talking a year ago, right? When he's talking like GameStop showing up on people's radars, then it's got shitty leverage ratios and everything because of the operating leases. Like, are people really making that mistake? Like, are people so I'm an individual investor, right? And when I think of all the smart people out there and the smart institutions, right? And I'm dealing with fundamentals that I got here that it's in the grand scheme of things, like there could be some errors in here and so forth. You see it erred on me today, but then I think, like, how could like the real money make this mistake with leverage ratios and not realize that it's just because there's been an accounting change in US GAAP where the operating leases are handled differently and they show up on the books, whereas there's not really been a fundamental change. Nothing has changed except the handling of the accounting. You know what I mean? And it's like when he said that in his letter, and I'm like, do people really make this mistake? How could you make this mistake? You're managing real money. It's one thing if an individual makes that mistake, no big deal. You don't need to feel bad about that. But if you're a big institution, that really surprised me. Then I think every once in a while I think, wait a second, do people really miss this stuff? Because that's stunning to me. If that I'm not saying that is necessarily the case, but for someone like Burry to mention that, and it's alarming to me. And it makes me think that maybe there's a more of an edge than I realized with some of this stuff, like reading a financial statement or something. Like, how could you make that mistake? Nothing has changed fundamentally. So anyway, these leases, who cares? You see this big, huge red, right? That sticks out to me. Who cares? What does it matter? It also seems like you can get that. I don't even agree with this. Maybe this is a point of contention with some people. Like, I don't totally agree with how these new handling of these leases, because people call them liabilities and blah, blah, blah. People get out of them. There's retailers getting out of them right now. If you can just find someone to take them over, or isn't there a cap? Like you can pay a year or two to get out of them or something. I looked into it a little while back, and it's like, don't give me that shit. Don't tell me it's a 10-year liability. You can't get out of it, blah, blah, blah. No, and so I don't agree with the handling of that. So, but if it's leading to an opportunity, well, then I'm like, wow, that's kind of helpful for someone like me. If they've created a confusion around the balance, I can't buy that. Is it? I can't anyway. But in the case of GameStop, I haven't mentioned this in one of my videos, and now I just don't feel in the grand scheme of things. I feel like everyone knows this. Their leases are short term, 18 months, 24 months, and I did I mention this part? Maybe I mentioned in the bullet point, like at least in 2019, this number has surely dropped. They were 95% or 90% EBITDA, positive EBITDA, like through 2019. I'm sure it's come down, but like, and they can get out of the leases of the ones that aren't unprofitable. Like, it's just a really great setup for a company with their backs against the wall to get out of it. You know what I mean? And so anyway, you see these leverage ratios, and then people are worried about credit risk, but then they can get out of some stuff, and then they do the bond exchange, and they're just like, everything's unfolded positively, and it's not reflected here yet. And this is why I feel it's beneficial to have to use both, to be a fundamental investor who uses technical analysis, or vice versa. I've said how over the years value is important. I'm a value investor, right? But the value itself matters much less than I originally thought 5 years ago, 10 years ago, whatever. And but now I'm like, I feel like it's a huge edge, because you see some technical analysts out there who think it's crazy. They think it's crazy. You see this on both sides. There's fundamental investors. I say this in one of the videos too. The fundamental investors who think people who use charts are crazy, and they think it's all folly. I know this because I was one of them. I thought this. I thought this is one of the first things you learn. Especially, I have Buffett and Munger said stuff about that. Whatever they say is usually gospel in the value world. But so they think people who use charts are crazy. And again, I thought that. And then I started, all right, let me start learning charts and stuff, because it seems like it could be a good bolt-on skill to have. And then I start reading their stuff, and they think we're crazy. They think we're crazy for looking at fundamentals. And I think, what the hell? I remember being like, how dare you? And then that's when I thought, there's something here. This could be a huge edge to be a fundamental investor who uses technical analysis, right? Because if the technical analysts think this, and they think it's nuts, they think it's a bad thing, that it's a waste of your time to do it. But I think, how else could you ever develop such conviction? This is the thing. And now I'm totally all over the place. Fundamental analysis is where you can like protect your downside quite a bit, right? I mean, the charts can help you too by looking at like support levels and then stop loss, right? But the fundamental analysis, you can really calculate what that downside might be. And similarly, you can develop conviction. If you know what that downside roughly is, right? If you know what the downside is, you can develop conviction in a position such that you could hold a big, huge chunk. Like, I mean, you only see the Rowan Kitty portfolio, but it's 15% of the portfolio. You can never have a huge, I don't know, maybe there's a technical analyst out there who disagrees. You can never have a huge position in your portfolio based on a chart alone. You just couldn't do it. How could you ever develop the conviction based on a chart? I would never be super... I don't care how good a chart looks. Would I ever put 5% of my portfolio, 10% of my portfolio? No. And that's where the technical analyst would say, well, that's why it's all about risk management, blah, 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 right? But I think that's it. Yes, right? Yes, if you are just using the charts, you need to do size your positions accordingly, blah, blah, blah. You always have to size your position accordingly. But if you layer in fundamental analysis, then you can be sure of what the downside is, And you can build big fat positions, and then when you build big fat positions, right? And you get those triples and those 5-baggers, which happen in deep value like it's so common. It's like so much more common than people realize. And then if you have a good sized position and you get a triple or a quadruple, it's like you're covered you just crushed it on the performance front. That's why if I'm trying to talk about a little bit how my process is different, it's very important for me to mention what type of rates of return I'm shooting for, because then you can kind of understand why I use all these tools. And so anyway, as a fundamental analysis, that's how I develop conviction and positions and stuff, and build big fat positions. Not so much in the Roaring Kitty portfolio, right? Because I just mentioned that's on purpose, because I want to manage this portfolio a bit different, almost like how it should be managed. If you manage a ton of money and blah blah blah, but if you're really trying to like crush it on the investment returns, you got to manage it a little bit differently. And that's where I think, it's a good combination, fundamental and technical analysis. Sorry, why did I just go off on that tangent? Can't remember. I'm all over the place right now. I forget. Okay, the leases. Yeah, the leases the leases get me going too, because because I disagree with it, and then Barry mentioned that. I just can't believe people would actually mess that up on the fundamental front, but maybe they do. And it was like 6 months in, like the accounting changes had happened like the year prior, I thought. Didn't they happen in 2018 or something, or year end or something? Just crazy if that's the case. Anyway, GameStop hasn't worked out yet, so maybe that's not the case. You know what I mean? But I don't know. I hadn't heard it mentioned anywhere else. Sometimes, first of all, I say this coming from someone who makes stupid mistakes. But sometimes the market's stupidity can surprise me and you as well, right? The market is often very. What I say intelligent is often quite fair. That's what I'd say. But it's also stupid at times too. It's also stupid at times too. So I'm like increasingly all right, this is one of those cases where I think it just might be, I don't know. All right, anything else here? I know I'm on GameStop right now, but the cash flow. Oh yeah, you know what? Sorry, one last thing. I mentioned this in the so you see me mentioned in in that GameStop video. Sorry, just one quick thing, because I use trailing 12 month stuff. You know, everyone's talking about like fiscal year performance and everything like that. But why use fiscal year performance when you can use rolling 12 months, right? So I can use this is all rolling 12 months, and this is through May 2nd, 2020, right? So when you look at this front, right, and you look at operating cash flow. Sorry, I'm blocking it. You look at operating cash flow on a year-to-year basis. Is this right? Is this GameStop? It's operating. All positive, right? 200 million, all positive across the board, right? Every single year, even through these shit years, these terrible years. Now, part of this is because of the working capital management and stuff, right? So but even simple free cash flow, positive. It's still positive on this unadjusted simple free cash flow basis through 2020, rolling 12 months. So people talk about fiscal year. Well, you got a new question. What's your price target on a short squeeze, and how would you come to that? Oh, geez. Oh, I don't know. You can't. A price target on a short squeeze? Sorry, someone just asked a question. Thanks for asking. I'm on a GameStop bender right now, and I got a beer too, so this could go all night. We're supposed to end at 10, but who knows when it's going to end now. Short squeeze, huh? So if you've seen all my videos, in fact, if you've seen those earlier videos too, some of them are super long. I apologize. What am I going to do? Those earlier ones, I don't think I do, or it's not a big part of the video. Short squeeze has very little to do with the thesis. I was involved. Well, that's not true. The whole time I've been involved, it's been heavy short interest, so that's not totally true. But it's never been, the short squeeze itself has never been part of it. I kind of viewed it like Barry did. It's like that's an opportunity for there to be a ton of volume and for you to execute some share repurchases. But short squeezes are tough because I'm not even totally sure how likely of a candidate GameStop is. Now, hold on. I should be, what is it? High, short, what is it? Is it shortinterest.com? Is that it? All right, so I say that, right? Now I see this, and it's in the video too, right? The percentage of the short. First of all, if you adjust for the float too, I did that in the video. Like it's like a huge percentage of the float. It's over 100%, like 110% if you adjust for Scion and Hester and Perma stuff. So first of all, that's exorbitant. I've never seen anything like that myself. I'm not an expert on this type of stuff, and I would say generally when I see super high short interest like these stocks you're seeing here, does this still not work? I still cannot. These stocks right here, when I see such a high short interest, I'm usually turned off. I usually think, oh, they probably know something that I don't, or there's probably such a ton. In fact, are there many so Bed Bath & Beyond was a stock that I got a double on. I don't think it's in the portfolio now. But there's only a handful of these that were even in the Roaring Kitty portfolio. So usually the high short interest is like, I get turned off by it. In the case of GameStop, this is what makes GameStop so much. So usually I'm turned off by it. Not only is it the highest I've ever seen, I've never seen anything like it before. I wouldn't say I'm a good person. I don't watch it that closely. I haven't been around that long in the grand scheme of the markets and stuff. There's people more experienced than me that hopefully could speak to this more confidently, but I've never seen anything like this before on the short interest front. And like I said, I'm usually turned off by that. And I'm super bullish. I think, what the F? And, but here's the thing. And so often with some of the short squeezes that I've seen in the past, there's something really weird about the company. Often it has to do with leverage. Like it's a super leveraged company that's really just priced for bankruptcy. And you saw it a little bit if there's a recent one that I was kind of following. Would you call this a short squeeze? This sort of thing. So it's subjective, right? But this right here, you saw it on Rite Aid last year. It went from $7 to 21 in a week. It was a week, right? I feel like I looked at this on the stream, right? It was a week. That's a little bit of a short squeeze. And it's kind of fizzled out a little bit. Didn't go into the stratosphere or anything like that. But if that happened with GameStop, that'd be dope. That'd be sick. And but super leveraged company, and that it is. I know people say GameStop's priced for bankruptcy. It's people talk a lot about bankruptcy, but truly priced for bankruptcy, it would be like at a fraction of book, like a much smaller fraction of book. And I don't know. It's really cheap. So it could surprise. That's what I mean. So I said $500 million for free cash flow next year, right? It could really surprise on the upside. And if that happens, like a huge, gigantic surprise, then people could be piling over themselves. But the secular risks are at this time so palpable that you need something more than that. And what you would need is that, like, if it. And so anyway, it's not. Let me just say, I don't feel as though it's not totally priced for bankruptcy. It's not crazy leverage or anything like that. And sorry, I'm not. Rite Aid is just the first one that came to mind. You might have other theories. I'll get to the Volkswagen one in just a second. But this is kind of looking a little bit bearish. This looks a little bit bearish right there. But so it's not super leveraged. It's not completely priced for bankruptcy. But the short interest is so crazy that might negate that. It might negate that. I'm not sure. But then what you need people to suddenly want a ton of interest. For that to happen, I don't think it's enough to just have a huge beat on the free cash flow, because you can see, look how cheap it is right now, right? And look how strong the balance sheet looks. I feel it's got so much cash on the books. The market doesn't seem to give a shit, which is fine if that's what the market thinks. What you need now is you need a narrative shift. You need a true sentiment shift. And clearly, now that it's August 2020 and we're still priced here, it's the consoles themselves might not be enough to trigger a short squeeze. You need a narrative shift. You need people to suddenly believe that GameStop is not going horse and buggy style here within 3 or 4 years. And for that to happen, they need some announcement that goes some major vendor partnership or something, or some major gaming experience or something that really changes people's mindset, where people go, oh shit, the terminal value isn't zero. That they go from the terminal value isn't zero to suddenly, holy shit, this company can grow alongside the thriving gaming industry, looking out 10, 20 years. Like, they can carve out a niche, right? And now the question is, how quickly can that narrative shift happen, right? Can it happen in the next 6 months as console? I actually think it could. There's probably some people, or many people out there, who don't think that it could. But I think, like, there's been so little news on this front. We saw the stores and stuff, and the social distancing is going to impacts that, right? But I could envision them announcing something here the next couple of months at the same, along with share repurchases, right? Let's say if they drop everything at once, if they drop an earnings beat, if they drop share repurchases, if they drop a vendor partnership or a major in-store gaming experience type thing, right? And then they drop what was the fourth thing that I was just gonna say? I don't know, that just something like of those and they at the same time change people's mindset on how they view the company, that they suddenly view it as a potential growth company. At this point, we just need people to view it as a potential growth company. Then forget about it, because then people will be falling over each other to buy the shares. You know what I mean? You need people to suddenly needing to be falling over each other to buy those shares. Now, it's conceivable to me, with this short interest as high as it is, it's conceivable to me that people just needing to close their shorts could be enough. It could be. I'm not experienced enough to say so, and I wouldn't bet on it myself. I would feel much more confident if they did all that shit. The share repurchases, like a free an earnings beat, like the sale leaseback, and a partnership of some sort. You know what I mean? Anything. Right now, we just haven't had much. We've seen the stores in Tulsa, and I think they look cool. But you need something to change people's terminal valuation of the company, and maybe it doesn't happen. I just think with the consoles happening too, people like talking about it. It's in the news. People's parents are talking about it. You know what I mean? If the kids want to buy it, like that's what I mean. I'm surprised it's August 2020 right now, and we're still below $5 because I know they haven't announced. Maybe that will start to get things going. They'll announce, like, pre-orders will kick off. They'll announce the price points. They'll come up with the release dates and stuff. And then maybe that will get stuff. It's going to be in the news everywhere. People are going to be talking about it. And then in that light, and then GameStop starts dropping shit on there, and then people just may be playing it for the console refreshes, like it's a bullish catalyst and blah, 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 but not so much the upside. But if you compare that with all this stuff simultaneously, maybe if everything gets dropped, and this is why I say it could be a busy couple of months, but if they start dropping like positive news after positive, I'm not saying it's going to happen, but if it does, yes, then okay, it's conceivable that a short squeeze could happen. But as far as to answer your question, I have no damn idea as to what a price target would be, because you can't forecast that type of stuff. First of all, I'm saying I don't even know if it's going to happen. I put the probabilities relatively, I assume, much lower than many people out there are saying, just because, I don't know, I haven't seen enough just yet. But that's the thing. Just like GameStop's transformation likelihood is not zero, neither is this short squeeze. That's the thing. Even if you put it at 10%, 20%, 25%, that's huge, right? That's huge. Because then, all right, now you got me thinking. Let's entertain the idea that it does happen, even though I'm conceding that I lean toward it's not going to happen, just to be clear. But I mean, I would like that. My options positions would go up, and the stock would go up, and then you could trim quickly. But let's say it does happen. How high could it go? I don't know. That's the thing. If it's just people closing their shorts and people just rushing to the door to just close their short position, not that high, because if the terminal value is still zero in people's minds, then what will happen is people will they'll be able to close their shares, but everyone will just start selling on the way up. And if everyone's just selling on the way up, the same share can be repurchased multiple times, and it won't be that difficult to close out of the short positions. You know what I mean? Because everyone's selling on the way up. Because everyone thinks, not everyone. I try not to speak in absolutes, right? But many people are thinking the terminal value is zero. So all the way up, people are selling, and then it becomes easy for the shorts to get out of their positions. What you need, this is why I do the adjusted float in the video. What you need are like people holding tight to their shares. That's why it matters how much Scion owns. It matters how much Hester and Permit own, and how much everyone owns. Because if they're holding tight, then there's even a limited number of shares, right? But then there's a question of at what price do they sell, and they'll be less likely to sell if there's a long-term secular growth story there. So, I mean, it could be a pipsqueak of a short squeeze, a pipsqueak short squeeze. It could be a pip short squeeze of like a double or something like that. But if it were everything at the same time, and really the big one is a shift in people's mindset about its long-term growth opportunities. Because, and again, I don't know what that news release looks like. I'm just saying, whatever the hell it is, if people suddenly go from one mindset to another, then then it could go up significantly higher. I still think that would take time. Like if you're talking $50 or something like that, like which isn't even that big of a market cap. But let's say $50 times 40 million shares. Let's say they do the share purchase just for the sake of discussion. We're having a good time, right? It's a $2 billion. It's a $2 billion market cap. That ain't shit. You see what I mean? Like that ain't shit. It's nothing. A $2 billion market cap. That's so it's nothing. So that's if they succeeded in transforming their business, but even before they succeeded, people think that they could succeed. Yeah, the upside after a share repurchase too. If let's say they exhausted, if you're down to a 40, 50 million share count, right now they're at 64, 65. So it's a lower. So then it might be a little bit lower, but you could see it go much. It's not. This isn't a forecast. I hope that's clear at this point, right? Go to $100, right? Is it crazy to think that it could go to 4 billion market cap? Shit, no. What was it back in the day? I forget what my video said. 5 billion, 6 billion? I forget. I think 6 billion. A sustainable growth, yeah, it could, but that's not a forecast. I have no idea. The price. It seems more likely that short squeeze wouldn't be. I don't know. I've just never seen anything like this. It could be your guess is as good as mine. Truly, I 100% of the float. but now it's August. You know what I mean? Like, they need some serious announcements. I need to be convinced. To be honest, I'm not convinced. I keep on talking about in my videos how it's possible. This is security analysis, that people aren't entertaining the possibility of it. It's like, well, I can entertain. If I can entertain the possibility, I'm an idiot. You can entertain the possibility, but I'm not saying I don't think it's necessarily going to happen. Come on, I don't even think it's 50% going to happen. But I don't need it to be 50% to think that this is a super discount price. So if I need to be convinced first, and for me to be convinced, but I need to be convinced for the market can be convinced, because I'm already bullish on the stock. I need some. I need some story. They need to tell me a story, a more compelling story than what we've seen so far of how they're going to grow alongside the industry. And this is the thing, with the consoles coming out, you can craft this story along with it. We got new consoles coming out. Come down to GameStop to play. Like, people talk about, brick and mortar, but it's like and I know the stores aren't gigantic too. That's something to consider. But you saw that performance center in the latest video too. That shit is sick. Okay. And then that too is dealing with social distancing stuff right now. I personally don't think this is forever. So even though it's a short term knock against the thesis, if whatever, for lack of a better phrase, I don't know, the longer term thing, you could still make a compelling narrative surrounding these types of things collectively. But they can, if they start talking about a narrative here where, hey, during this console refresh, you're going to come out, you're going to play these games here for the few weeks leading up to it, or get an exclusive opportunity to test out the new consoles here, or we can think about, you can brainstorm this. This is kind of what I was trying to. This is what other people have too. Scott Maven in his article as well, and what I try to do in some of my videos, just think aloud about what they could do. So I wanted something like that in these next couple months. But without that, the upside, not just a short. I mean, we're talking short squeeze, but it's really the upside on the stock. You know what I mean? It's the upside on the stock. The upside is much more limited if you don't get that. And if you're if you want to suffer from some confirmation bias, you can convince yourself that this is all on purpose, which I can entertain the possibility of. But like, they're doing it on purpose. They're dragging their feet. They wanted to get the bond exchange behind them. They wanted to get these shitty quarters. They can see they had to close their stores. Like, these are shitty quarters. And so, like, maybe they're just trying to get closer to it, and then we're gonna get an onslaught of it. I wouldn't bet on that, but it's possible. So maybe we start getting that better story now. And I think I meant, when did I mention this? On a YouTube comment? Someone commented on one of the videos. Thanks for everyone who comments in the videos and stuff. Any comments and feedback you give me is helpful, because I don't know what I'm doing. I don't know what I'm doing out here. So I'm like, give me some feedback. Is it good? Is it bad? Is it not good? So someone commented on what I said. Like, I'm excited for the next 6 months. I don't even give a shit what happens with this stuff. I mean, I want it to go up, but I mean, aren't you super curious about what the hell is going to happen here? What is 100%? Have you? Can it be unwound in a systematic manner? I have no idea, but I'm very curious to see. And with the setup, it'd be interesting what management does. I don't know. I just find it fascinating. In the grand scheme, I've seen a lot of positions over the years. I haven't been super dialed into a ton of them. I've been invested in a lot of them. But even in the ones, I don't know. It just seems like a fascinating case study. I hope it works out, so it'll be a good case study that I'll look back on with rose-colored glasses, you know. But yeah, we'll see what happens. We'll see what happens. And we'll all start whenever their next announcement. Well, they could announce the sale leaseback before them because it looks like it's closed, but it could be they'll wait till earnings, in which case it'd be mid-September about. So until then, we can just have fun talking about we can have fun talking about the possibilities right now, because 6 months from now, what is it, August, February, January, February, we'll be like, all right, we have a decent idea as to what's likely. But I think this narrative shift could take 12 months too. You know what I mean? I just think it would be more compelling to happen during. If you're going to make the case that you're going to transform yourself during a console refresh, do it now. You got to do it now, because this is when it's like heightened interest, and you can. But it could also. I think it can also happen over time. This could be a 2-year transformation. You know what I mean? I think people, myself included, are just like, now's the time because the console refresh. But it could also happen over a 2-year time period. But like in 2021, certainly you think by 2021, or I mean, if the thesis hasn't worked by 2021, I assume I have been wrong about it. You know what I mean? Or I just got the estimates wrong or something. Like, no big deal. It's but anyway, I hope, did I answer your question? Certainly not, right? But good discussion. And I do agree with, even though I don't think it's a likely outcome, I think I try to think through this stuff. Hey, all right, thanks, man. I appreciate it. Because even if something isn't likely or probable or whatever it is, it's still important to think through this stuff. Because even though, like I said, even if it's a 10% chance of this, and that 10% is $50 per share, a mere $2 billion market cap, let's say it's a 20% chance they buy back the shares, they exhaust the authorization. Just a 20% chance they do that. And then it's a 20% chance they successfully change the narrative in the next 6 months that they are going to transform into a growth story, blah, blah, blah. And a 10% chance of a short squeeze. You combine that all together, then it's like super compelling. You know what I mean? So it's not enough to just say what's going to happen or what's likely to happen. You still need to weight those probabilities. And that's what I feel people aren't. It doesn't seem like people are, maybe people are, and they're just not public about it, which happens all the time. But it just seems like people aren't weighting all those different possible outcomes adequately, in my opinion. And I think this is the opportunity. But let's see. If I'm wrong, I'm wrong. That's okay. And if GameStop works out, we can give me credit. But if it fails, just blame Barry. Just Barry. What were you thinking, Barry? What were you thinking? No. All right. So that's high short squeeze. That's GameStop. Anything? All right. I think that was it. I just wanted to cover that share of purchases because, like, did I fail to mention that in the latest video? That's a bummer. Maybe I made a note somewhere that there's still is there 120 million, 100 million? And I forget, even at $5 per share, I know I just did that calculation. 24 million, you're 40 million? Crazy. Crazy. Just looking. Oh, you know what else I like to see? One thing that sticks out with... Sorry, I'm on a GameStop kick now. I'm just... Look at the retain... This is a good metric. I don't know. Has anyone used like... Oh, sorry, you can't see this. Retained earnings as a percentage of assets. This metric is sick. I've been using this more and more over the years. It speaks to first of all, if you have like negative retained earnings, that's like it's not a this is a bad investment flag. It's a like, hey, heads up, they don't have any retained earnings or they've written off all their historical earnings or blah blah blah. But like, and so GameStop's heading back to zero because they're writing down, they've wasted all of their earnings by way of shitty acquisitions. And so past management, it's always frustrating, right? When you see these people talking about past, who cares about their past? But anyway, this was a historically very successful business, and I get the secular change and all that, blah 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 blah. But I just mean I just wanted, of all the metrics, I was just scrolling down this. I like this one. I feel like it's a good tell into the historical quality of the business, and also whether or not there's something there. Let's what was it, up 50% as a percentage of all retained earnings? You know what I mean? And then they blew it. They blew it. It was just throwing off such a ton of cash. And I know not huge net margins or anything like that, but man, that free cash flow, $500 million in free cash, just crushing it. Now I'm curious. So now let's take a look at Fossil. Oh, where'd it go? Right. Oh, right there, right at the top. Oh, what are we doing? Look at this. Same thing. Crushing it, huh? I mean, it's coming back, right? It's coming back and it's down lower. But anyway, when I see that, I should move this up, because if I see that and I see that trend, I think, all right, at least they were good back in the day. But it's just like a little bit of a quality metric. I think it's included in like the, is it included in the Z-score? I have that definition somewhere. I don't even remember that definition of Z-score. On my screen, I forget. But okay, where was I? Do I get anything else on Fossil? Let's say this. Dig into Fossil more. That's what I'm going to say. It looks compelling, sub 4. Like, it still looks compelling now, but that 48% without a GameStop like catalyst. I'm like, oh, right there. If I didn't see that, I'd be more like, oh. And then look at this big drop off. And then there's no insiders buying. Oh, the insiders were buying, but they haven't bought since June. But some good purchases. You know what I mean? How's no one talking about $1 million in purchases? He was still buying below 6. He was buying in March too. Like I mentioned this, but I love to see this shit. They were buying when all this shit's selling off. Oh, that's great shit. Nice job, management. It's with so much uncertainty, right? I feel like I've said that before. But it's the same guy though. Is it all the same guy? It's mostly one dude. Maybe he's a crazy dude. You know what I mean? Nah, but that's. I joke when I say that, but still, it means more. This is why I include this in the. I include this. You see right here. Do you see this section right here? This is insider buying less than within the week, 1 to 2 weeks, 2 to 4 weeks, etc. But I look at the number of insiders, right? It's a prominent metric in the tracker spreadsheet too. Like, and the most common example I've been using is OVV. Can I pull that up? Is this the OVV had like something like 12 insiders, bought millions of dollars worth, and I'm like, I made a joke in one of my videos. I would buy on that alone. I'm not even kidding. I wouldn't make a huge position, but this is a good analogy actually. We talk about charts, but like the technical analysts just look at the chart, like, yeah, buy it based on this chart. Like all you did was look at the chart, and they'll pull the trigger like that based on that alone. And I'm like, you could never build high conviction with that, right? But the same thing, you could do stuff with fundamental stuff too. Everyone uses, price below book and all that stuff, but forget that shit. You know what I mean? Use other stuff like insider buying. And I know you've heard people talk about insider buying, but if you see like 12 insiders buying, now I have to pull it up because OVV was ridiculous. Now I've been tracking OVV for quite some time, and I've mentioned a number of times on the damn stream, so I apologize for always bringing it up, but it's just such a great example. Oh, you see some of the ones we've been checking out. Was that 6? It'll pop up here. Like if you see all them buying, and they're buying at a discounted price, like all at the right time and stuff. Oh, pull it up here. Look at this. So this was from. Oh, so this is all. Let me just do a little bit of a higher dollar amount. 50K. It's not that many people. Is it because I wanted to do 12 months? Is that how far is this? All dates? What? That don't look right, does it? Oh, you know why? Just because. Okay, so that's interesting. So if you include everybody, and if you just did unique people or something like that, but you could see if we just did 1 year, I should have just pulled this up. What am I doing pulling up the fundamentals? Where is it? Oh, filing trade date, past year. Look at this. Look at this. Starting from February. So all different people, right? So that's the thing. I guess the big purchases were mostly the same people. Thomas Ricks was a big person. Bruce Waterman. Thomas Ricks. It wasn't okay. You know what? It wasn't. I'm glad we pulled this up. It wasn't quite as spread out as I realized. Because this is the thing. If it's mostly one person, I'm not saying you say it, you throw it away. I'm just saying it's a little bit less meaningful than if you have 5 different people buying 200K. And so you do see it with many stocks. You see it with CNR is a great one. Where they were going ham past 2 years. They were going hams, I guess. Look at this shit. They were going crazy. CNR, one of the top positions in the portfolio. This is what I'm talking about. Like, these people are more dialed into me, more dialed in than me, than you, than so many people. And if they're just going crazy, and there's a whole bunch of them, you think that one person could be crazy. I've seen one. I don't mean crazy. I use that term loosely. I just mean have the wrong idea. Maybe they're a bad analyst of their own stock, and they just have a ton of money. You know what I mean? But you got 5 separate insiders dropping 500K each, $1 million each. It's unlikely that they're messing up, especially if it's at the right price. You know where else you saw it? Was it STKL? No. Was it STKL? No, that wasn't it. Oh, you know where it was? Hill. They like timed it right. That was right before chat. Or was it just changed? Oh, it was mostly one dude. No, that's right. So look at James Chadwick, Todd Weintraub, but not that much. David Skuro, James Chadwick. Anyway, it's still mostly one person. You're always going to see it's mostly going to be one person, which is kind of interesting. And then what you do is you look into that person's background. I'm not going to do it here. I don't care. But like here, it didn't come up. Oh, there you go. OVV. So this is what I'm talking about. OVV. The past 6 months, there's been 12 separate 12 separate insiders who have purchased, and they bought a total of 1.7. All right, so not as much. I'm making that stuff up. There's been other companies who have bought millions of dollars worth. But I'd love to see that. I buy it in that alone. There you go. Forget price to book. Forget all this other shit. Buy on that. You see a company trading at maybe you incorporate some value metric, right? And then you see a whole bunch of insiders going crazy as the stock price is coming down and stuff. There you go. Now, sometimes they mess up too. It's like GCI. Check out this. They mess. I felt as though they were messing up. I think I said this on one of the stream, but I remember thinking it was like March 5th, and I'm like, what do you do? It's a leverage that they get. Is it USA Today that they have? And I remember thinking, what are you doing? This was early March, and I'm like, slow down. You're buying up too heavy. It's too heavy. because a super leveraged company like GCI, oh, you can't see it's GCI, I got to scroll up. A super leveraged company like this, that your stock price is dropping another 50%. If you got a super strong balance sheet, no problem. But if you got and you know what the other one is? So first of all, you can see this one, right? All different people too. Sheehan, Miller, Wall, real money too. Reed, 300K, and he bought a shit ton back in November too. So this one's been on my radar. Now the question, what's the price right now? I've long been wondering, is it this could be it's not in the portfolio. I've owned it. It's not in the portfolio right now, but this could be like a solid. See what I mean? Look what price they were buying back. They were buying the shares at he bought a shit ton at $6, and then they bought a shit ton in the high threes, and now we're half that right now. So there could be something here, but it's hugely leveraged and stuff. And there was a question of how's it going to hold up with all that's going on, and is it still the newspaper business? Remember they split up? Yeah, all right, so they can still get the newspaper. So there could be something there, but it's risky in this environment. But it could be a double. It could be a double, but it's kind of risky. I don't want to pull up the fundamentals. But anyway, I remember thinking, slow down. You got a really risky stock. This thing could be halved again. And then it did. It went to like $1 or something absurd. Let me just see this. So this is what I mean. So it's not always like a telltale, like you need context of everything. But they were buying like, right, like, oh, this looks bad. I'm sorry. What is it? Is it Gannett or Gannett? Individual investor. I don't even know how to pronounce this shit. I was like, this looks, sorry. Now it looks really bad. And, but I was saying this at the time. I wouldn't, even though I was tracking it. And then it goes boom. Then it goes boom. And I'm like, oh, this is how it works. If you have a super leveraged stock, you got to wait. The other one was this one, U.S. Concrete. So see this chart right here? This is, see, January and February was in like the 30s to 40s, and then it was briefly, it was briefly in the 20s, and then check this. Same thing. Look at this. Look at how they were 400K for the chairman of the board, 100K, 200K, all these different people. I'm like, what are you doing? Also leveraged and blah blah blah. Anyway. So you need context and stuff. But anyway, why was I talking about this? What company was I just looking at? Fossil. So anyways, I say 3 insiders. So 3 insiders good, but is it mostly just that dude? Let's just look that up real quick. Anyone know this guy's background at all? Now I'm be really curious. So let's see. First of all, let's just see if he's doing anything else. You click this. Sick. Also, if you don't know an open insider, you can hover over this. This thing is sick. Just a quick take on the chart. So if you're looking, oh, what are we gonna do today? We've been dilly-dallying. We could at least see what the daily movers today. Wow, everything was moving today though, right? So there'd be a lot there. This looks interesting, right? You can just pop this up. Anyway, it's sick. Okay, what's this guy? Oh, I've looked him up. You see the purple links? I've looked him up before. Oh, you have to. All right. Do they got any close out of some shit? Chief Commercial Officer, EVP. No real background. I want an interview or something. You know what I mean? Wearable Technology Summit. All right, there's not much here. I'm not going to dig in too much right now. Maybe a Fossil were like $4 or something. But regardless of his background, you see me do that sometimes on stream, right? Well, especially with funds and stuff. I try to look up at their background, but that's the type of thing that I would do. But let's keep going in the interest of just mixing things up a little bit. Let's go back to the tracker. Where the hell are we? All right. Beast by 143 though, huh? Fossil. Whew. Let's get that on the top right. All right, let's go. So this one was let's quickly just see what the hell else was going on today. This one I added to that, right? Yeah, I added to that per our notes. Thank you very much. I was happy that I added to that. I'll add more, but I'm not doing much right now. Just watching. 0.63 DBI. I'm grouping in my mind like DBI, GIII, and UFI. They're kind of all in the same in my mind. I'm noticing. All right. NGS, I think I want to add to NGS based on that tweet. Now I need some cash. But I think I want to buy this. I think I want to buy more, especially if it pulls back. I like I feel like it's a solid, it's just because of the upside. I don't know how much upside is there, but I'd like it a lot more at 6, which is where it just was, right? But now I like it popped and got my attention again. But I also need some cash. Can I borrow some? Can the Roaring Kitty portfolio borrow some? I'll raise some. 17%. Oh yeah, did I buy more? Oh, I bought more of this in some other accounts. Like I've talked about this one. Go Cliff. I got nothing more to say. This is truly a play on at this point on Clifford Sosin. Oh, some other people bought too. If you did, I don't know if I think I mentioned this on the stream. Check this out. First of all, he had another 7% to his portfolio. And this person, we did look him up, right? Norman Matthews. Did we? Did we look him up on the stream? Norman Matthews. What is it? Party City? I don't even remember the name. Is it Party City? Party City, it is. All right. He's the chairman. We looked it up. He's the chairman at it's Children's Place. But okay. But anyway, this is enough for me. I'm basing it on this. Look, it's a super discounted retailer. Also, it's kind of a smaller part of the thesis. Doesn't it seem like it's kind of one of those brick and mortar retailers you kind of just go there and pick up some stuff like last minute. You head into a party. Like that's what I do. I've been there. Go into like I'm not the representative customer of anybody, but hey, going to a party or something like, hey, yeah, I got to pick up some costume shit or whatever. Or whatever. Or you're gonna host a kid's birthday party, or as my daughter gets older, I'm sure I'll be going there just to pick something up because I'm not gonna have the foresight to be. When you're a dada, you forget this stuff. You know what I mean? You got to get it ahead of time. Excuse me, you'll forget to get it ahead of time. You got to pick it up day off. So the business model itself sounds kind of interesting. Same thing with Michaels, which is a missed opportunity for me. I owned it, and then I think I definitely owned it, and I think I got stopped out, and I never bought back in at the lows. I was so diversified. Look at this. Oh, it's another 10 bagger. You got a 10 bagger right there. Damn. I think it's in the portfolio, right? Didn't I bought it in the threes, but I was too late. Oh yeah, here I am upset about a triple. You know what I mean? Like if it just the bit you get with value investing, it's the big wins. It's the big wins. There's triples abound. You know what I mean? They're especially coming out of what we just came out of. Triples are there are countless. I don't even know how many triples are in the Rowan Kitty portfolio right now. There's a ton, and the portfolio got hit on the way down too. Don't think that I was 100% cash and then moved in. They're all up, but I just mean that's the time to get some 5 baggers and some 10 baggers. Or if you do get a triple, make sure that you put a good amount of money in them, right? I'm pretty sure it's in the portfolio. But anyway, similar business model where I'm like, yeah, I can kind of see that. And maybe Party City is even more than that business model. To be honest, I'm not totally dialed in, but this is what I mean. Some of my theses are embarrassingly simple, and I think I could put together 1-minute videos like I did for GameStop for Party. And if maybe for better or worse, right now you think if it works out, then we can look back and this be like, oh, that was such a basic thesis. I can't believe you could buy just on that alone. But right now, there maybe there's uncertainty over whether or not this is going to work out. But let's just see. Let's test. Just like we test the charts, let's test this. Let's see if it works out. But I think I even bought a little bit more. I pulled back under 2. I kind of been averaging in these low 2s. But I just maybe it's because maybe I'm anchoring a bit. But I think Clifford Sosin. I think he's got it. All right, let me keep going. 928. Oh, let's at least get into some. Everything's up. We get it. Up. Oh, I do got it in the portfolio. Oh, it's 0.5%. That's not even. It's 0.5% because it's a triple. You know what I mean? Maybe it was like. Well, the whole portfolio was up too. That's right. But still, it wasn't a 1% position. So shit. I wish I. Whatever. It's these ones that weigh on me. All the winners, and I'm like, damn. The ones that I was dialed into. All right, keep moving. Nothing. Oh, what are airlines doing? SkyWest was up. Not much. Who cares? All right, so airlines were up today. Whatever. What about SPR? Yeah, they're all up. Let's see what happens. Could just be one day. Copa. Oh yeah, we talked about that, right? This was in the Roaring Kitty portfolio, and then Barry stole this pick from me. Thanks a lot, Barry. Just kidding. 10 ago. No, everything up. 5-10%. Oh, Signet. Did they announce today or something? I don't care. Now we only get half an hour left. Now I'm like, do I care? Nah, I don't care right now. I'll care someday. I don't care right now. CPLG. Sorry, I know I'm scrolling fast. I'll slow down. All right, crap. I think I can. Some of these I think I can. Some of these smaller ones I've been trimming all along the way. I feel like I can sell out of some of these fully. So I'll do another pass at these. Not right now. And we'll do another pass, and we'll just start taking a peek at what I can trim. All right, that's about it. Look at that. All right, we're getting small. There's for the nominal, for the legit positions. But, yeah, like I could sell Murphy now, right? I get so much energy exposure. I mentioned this on the stream. Can you believe this was a triple, by the way? This is a huge company, ain't it? I legit got the triple, and I couldn't believe it. I'm like, I don't know. I definitely looked that up because Murphy, I just surprised. I thought it was huge. Oh, here you go. There you go. 2 billion market cap. Not as big as I thought. That's not that big. All right. And you know what I want to do someday too is I want to like screen. I want to sort. I want to sort by the different things. I do it sometimes, but sometimes I want to screen the actual portfolio. You know, like right now, can we just sort by cash? I want to sort by this column right here. Cash as a percentage of price. Yeah, cash, not net cash, just cash. Just cash. Just want to see. I'm just going to see. That's all. ADS. Now that's a weird, data processing one. Peabody. Look at Peabody. Tenneco. Forum right there. See what I mean? That was positive net. A lot of it was cash. You know what I mean? I didn't even mention that. I should have mentioned that in the tweet. Talk about net. You got positive net. You got a good chunk of cash on there. Shit. GameStop. Boom. Giphy. Guff. All right. Okay, just curious. DXC, you can see some of these. All right, see, there's probably, and then you can filter by insider buying too. That'd be sick. There's probably something here. If we could backtest, you know what? Cash as a percentage of price, then filter by insider buying. There you go. We got a new investing methodology right there. And then incorporate market cap too. Oh, there's so many ways you could do it. I think. I don't know. We're testing stuff on our own, but all right. Was there one other thing I saw? Was simple free cash flow to percentage of price? Oh, and then you know what? I'm a big fan as far as the metrics go. People talk about. Look, I don't give a shit about PE. I don't care about PE. Maybe I care about price to the like peak 3-year average earnings or something like that. I don't care about. Who cares about price to trailing 12 months earnings? It's so funny that it's so prominent. You know what I mean? Even I care about price to book. It's very important. I'd say, but I think the top one is probably sales to price, or price to sales, or whatever you want. Just because you get so much operating leverage with it. And so now let me just. So there you go. So the travel center. See this? Look at this operating leverage. 29. We just did that calculation. 3%. It trades at 3% of revenues even after the run up. So much leverage there. I had seen it with UNFI too. That was a position in the portfolio. VRTV, which has its secular risks, but it throws off a lot of cash. Wow. So it's no surprise that these are all good chunk of. Oh, didn't I do this before? If I do this, if I group these together, top 20 positions are 27% of the Roaring Kitty portfolio. There you go. Holy shit! I mean, GameStop, right? Stealing the thunder, but it's still 12%. The rest of them. Hey, party! There's party. Let's party hardy. Right there, half of 1%. Yeah, I really like that. And then I like EBITDA to EV, or EV to EBITDA. Oh, I'm never going to get used to saying it that. I'm trying to say it the way you're supposed to say it, but EV to EBITDA, and then these are in order. Sales to price. Anyway, I was just curious, EBITDA to EV, because I knew travel centers would be at the top. PBF, I like PBF. Hell, even just the top 7 of these are 20% of the portfolio. Top 10? 22% of the portfolio. That's sick. You do that yourself too. We're like try to home in on what exactly it is you care most about. You know what I mean? In insider buying, most of them have insider buying. Oh, Peabody in it. I mean, Peabody is not such a small position. But Quad had some insider from Bill Miller for his personal trust account. It's not here because it was it was in late February. Oh, it doesn't qualify as insider buying because he's not an insider per se. He was buying for his fund, so that doesn't show up here. That's something I know off the top of my head. CYH stand, no insider buying. No, I think they may have bought last year, but that's a different type of play. It's all about knowing what the type of play is. You know what I mean? You got to remember, like, what am I in this for? What type of play is this? How to size it? Blah, 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 blah. All right, what are the daily movers? 934. Ah, shit, there's going to be a ton, right? Let's move quick. Ooh, Gulfport. Oh, shit. That looks terrible. Oh, you remember this day? I remember this day. This was, there's a good story. So you might look at this day. So this was the 13th, March 13th. It went from 38 cents, and then it closed right up into the close. It happened on this day. This was the day that Trump announced that he was going to give. This one's good. It's also frustrating because Trump announced he was going to give like a 3 p.m. conference on a Friday. So this is in the middle of everything, right? March 13th. Like everyone's like, what the hell's going on? Market's kind of struggling. It's like he announces in the morning, and everyone knows he's going to announce something at 3 o'clock. In midday, like right before the market closes on a Friday. And I remember thinking, I'm not an expert on this stuff, but I remember thinking that's got to be unusual, right? 3 o'clock on a Friday. Who announces shit on that? Like, what's the market gonna do today? What's it gonna do into close? Because I thought because there was so much going on, I'm like something's gonna happen. It's either gonna sell off or it's gonna go in. In the week was such a bad week. So I'm just gonna use this as a proxy. It's not a good proxy, right? Because it's so volatile. March 9th. It's not a good proxy. Oh, that was the week of this is the week energy. So this is the week energy was right. Energy exploded. So yes, so everything was like so much uncertainty and everyone's going crazy. It was such a bad week that I thought, you know what? I think the market's gonna rise into after the announcement. Even though I don't know what he was gonna announce. It didn't matter. But I was just trying to figure out the market's like trying to kind of position itself for the weekend. I'm a longer term value investor, but then I'm like trying to think, what do you do to play this? Because just to do something for the story, you got to do that shit for the story. Do you know what I mean? And so I remember thinking, well, it's probably going to be the big players who are going to run, people who are going to want to buy more of the stock. And I thought, so let me pick one with options expiring today, options expiring that day at 4 p.m. an hour later, and it's probably going to be, you probably want to buy super liquid options with a company that's probably going to run like really big. People are going to buy it. And so I picked Apple. So I'm like, all right, let's do Apple. Then I'm looking, this is at like 11 a.m. just poking around, just being, all right, let's see what the options are trading. I remember they expire in 5 hours. This is stupid, right? I know this, but I'm like, for the story, diffs, right? You got to do it. And so I'm looking at the calls. I'm like, damn, these are cheap. What was let me pull up Apple. It's going to be up on Friday. Watch this, that Friday. There you go. Look at this. So look at that. Yeah. So this was on the end of March 12th, and then it wasn't down on the day, right? It was up a little bit where it opened. I guess it was up already. Oh, it was up already. Interesting. I don't remember the midday action. I just remember trying to pick which one was going to go, and but if we had the intraday, we could pull up the intraday, and I remember thinking, all right, so let me check these options. So let me get an option a little bit out of the money, not too much out of the money, because how much could it run? But I figured it was going to expire worthless anyway, so I was like, let me just get something crazy. And so what was it? I picked 270, and first of all, I picked 270, and it was trading in the mid 260s or high 260s, so it was like right there. But again, it was going to expire in a couple hours, and so I'm like, you know what? I gotta do, so let's do Apple 270, let's do it, expires at the end of the day. So then the day's going on, and I was like, now we're getting close to 3, and then I think it's at 3, and I'm like, I wanted to wait till the end of the day because it would get cheaper, right? It's decaying and stuff. And then I'm like, and then I didn't do it. And then the value investor in me was like, what are you doing? What are you doing? Like, you don't know what you're doing. I hate to ruin a story. Like that whole thing actually, like I was actually trying to figure out how to play, and I'm sure other people were too. I wasn't so dialed. This isn't you can see how I invest here. This isn't how I work. Other people were probably thinking the same, more trading type, but that's not who I am. That's not what I do. But I'm like, I got to look into this. I got to do this. Let me pull the trigger. And I remember I remember thinking I was going to buy just a small amount. And and I remember looking at it. And so anyway, I didn't do it. And then all of a sudden, everything started to run. And so then I didn't. I'm like, oh shit. So then I started buying stock positions and some other stuff too. And before the end of the week, as it turned out, things kept on falling after. So the whole thing, it didn't matter at the end of the day. But I sure as shit wish I pulled the trigger on that, because that would have been, I think I did the math. It was a 60x. So even, you know what I mean? Even if it's a small dollar amount. I want to say it was 60x, right? Because I remember thinking, yeah, 60x or 70x. It was 70x, I think. And I remember thinking, shit, all right, just put a couple down there for the story, and then we could say, hey, we tried to play it. We tried to play it for fun. And I talked myself out of it. The value investor would be like, you have no edge here. You're crazy. Who the hell knows what's going to happen here? There's so much uncertainty, blah, blah, blah. And I didn't do it. So what a terrible ending. What a terrible ending to what could have been an epic story. Not a huge, but you know what I mean? So anyway, that same day, Gulfport went up 5 to short squeeze. Talk about short squeeze. Boom. Talk about short squeeze. Look at this shit. And it was in the portfolio, but a small position in the portfolio because I bought a shit ton of energy stuff that week, and it went from 40 cents to $2.40. 5x in one day. You see that with the biotech stock. You don't see that shit with energy. And then I was pissed because it came back right back. It came right back down. No big deal. But anyway, there's my dumbass Apple story. And you kill yourself because you even think about it. You shouldn't even think about it in the first place. But I regret not doing it. I regret it. Even if I had done it and lost, who cares? Because I never do that stuff. You just do it once and be done with it. Bummer. Anyway, sorry. So, why was that up today though? Was it? Now I see. It got booted. I ended up replacing with energy positions. Was it just up because of energy? Energy was up today just because of energy. All right, looks like it. Is it like a low float type stuff too? I forget. Shit, we gotta move. All right, VTOL. This thing's. Oh yeah, this is the VTOL Bristow. They get the helicopters offshore. I used to own them, but then there was a merger and stuff. Too messy for me now. Everything's up. All right, so nothing's up crazy big. We kind of already saw these things. Look at RFP up again. Oh, Vera Bradley. So here today, this is what I'm kind of looking at is the watch list. What's Bristow doing? Do we get time to just quickly look? Rapid fire. Oh shit. Oh, this isn't a missed opportunity. I don't give a shit. This is the offshore helicopters though, right? What's going on here? And wasn't Transocean up today too? Oh, because energy was up. So the more speculative plays, offshore drilling, offshore reserves, but more so drilling, and helicopters are stuff that service the offshore. But what about oil sands? What do oil sands do today? Oil sands. Those are my two things. If you're gonna try to play a speculative play in the energy industry, you first do equipment and services, whatever the hell they are, then onshore type stuff, and then offshore and oil sands, because who knows if they'll actually be drilling for that stuff. Yeah, look at that. So was there any news here? Was it just damn, that's quite the run up. Shit. Did I miss something? Energy was just taking on the chin. What's going on here? All right, so it's just a straight miss. No real thesis there. There was a merger there too. It was gonna go bankrupt. There was some weird stuff going on, and I didn't care about I didn't want the risk on. All right, maybe I'll look into that later. But I notice it's on deck. It's not even on the watch list. I put it on deck. I'm like, I don't even want you in the watch list. Don't be interrupting me. Then it's interrupting me. See, we gotta go. 20 minutes. Vera Bradley. This one's always looked interesting. That's a legit name, right? You know Vera Bradley. I know Vera Bradley. I don't have any Vera Bradley, but it never really looked that cheap. And no shit, it hasn't done anything. But never really got that cheap though. And this chart looks like shit too, right? Let's do a quick check. Like if someone owned this right now, this could be a quick sanity check. This is Vera Bradley. Did anyone buy it last quarter? Some fund? Is that like did the insiders control it? Okay. I vaguely remember that. Anyone buying in the open? I don't think so. Patricia Miller. That was back in December. Oh, there's some weird stuff going on there. McAvoy. All right, not much. Keep moving. I need to see something for me to dig into that. Movado. Oh yeah. Why is Movado? So Movado, it just never got that cheap. I kind of like Movado for a similar play as Fossil. Also a relatively strong balance sheet. This could be a better play actually. This is in the portfolio and it was much bigger. But what happened was it never got that cheap. I remember thinking, what are you doing? Go get cheaper. And when you're staring down five baggers, like, I don't want to say 100% chance of five baggers. You're staring down legit five baggers and they're all over the place. Movado was in the portfolio. It was a good sized position and I legit sold it to raise cash for these other positions, which turned out, I've made plenty of mistakes. It turned out it was a great decision. It's done nothing. But what is frustrating is that it never got super cheap. It was like, how are you still at $8? How are you like, go cheaper. But this is the thing. If you have a super strong balance sheet, you have a relative to others, a fortress balance sheet. I'm not saying it's super strong or anything like that, but relative to everything else there, they didn't want the insiders or who owned it, who controlled, they didn't want to sell their shares. They didn't care. Like, I don't give a shit. And it turned out that was the right decision to make that trade-off. But right now that things have cleared up a bit, it might be time to revisit this. You know what? Because that's a legit brand right there. Arguably more luxurious than Fossil, right? How about anyone buy that one? Nah, no one. Damn. No one buying that one? What's the float on that? Fossil still in my mind. Float. So not that it's just not. It's not that big. It's not that big. First of all. Just wanted to get the market cap. Oh, it's here. 257 million mark. So it's not that big, and the insider's only on 4% though. Okay. Yeah, it's just okay. Just not that many shares outstanding. You know what I mean? 16 million. All right, never mind. Keep going, keep going. 9:45. Let's go, let's go, let's go, let's go, let's go. OLN. Damn. That's okay. It's on our radar. We'll add. It's at our 20.7%. GII. Everything was up. Nothing there. Okay, what's down today, huh? Was tech down or anything? Biotech. Dark green. Biotech. Boom. Pharmaceuticals. Biotech. Blah, blah, blah. Wow. Well, 45%. Don't worry about that stuff. Lifeway. Yeah, I never liked that shit. Kirkland's. That's giving back. That was not like a 10 bagger though. Oh, I don't even want to. I don't want to. I'm not gonna pull up the chart. I'm not gonna try to. I'm not trying to cry myself to sleep tonight. You know what I mean? Wow. Oh, look at this. Straight green, huh? The hell? Boy, that's weird. This many? I mean, some days you see a huge sell-off, but holy hell. Okay. I don't care about the week. Oh, can we check insider buying today real quick? Okay, so this is forum. So yeah, no, they made the this is the insider buying tab. I'm blocking the tab there. I keep forgetting you can't see me click on the tabs, but that's okay. It's forum. OLN, we saw the insider buying. We talked about that. But see the red, all banks, not seeing much. And then the last up is Eric. So there hasn't been much since we last reviewed this. It's kind of all been the same, kind of quiet. But why isn't party? So sometimes why isn't PRTY showing up here? I think maybe it will show. Let's check on this. Maybe it won't show up until the next day or something. It should be here though. PRTY. All right, let's just check this real quick. Maybe, I don't know when the spreadsheet works. Maybe this... It's the spreadsheet's taken on a mind of its own. It's taken over every. Oh, Green Hill, they're buying again. This is a buy. I've been waiting for them to do something. Oh, Flowtech. Oh, he's going back in. Oh, I'm glad we checked. Let's do this. Sick. He's buying back in. Let's do it. This guy, David Nuremberg. He bought in. He pulled a investment management company. He runs some funds. Oh, is he on the board now? He's on the board now. Oh, this is. I'll add to this. Wow, here we go. Nice. See, I've been noticing that the insider buying tab takes a little while to update, and so we've been missing out on some things that have been getting purchased. But look into this guy. He's I can't say that I know too much about his historical performance. Do I know? Yeah, he worked at Bain. He runs a fund, and yeah, he bought back. He bought in March. Or right around it. He crushed it on that purchase, and we were buying at the same time. I owned it. Look at this, 97 cents. He bought $1 million worth on March 11th, and then. But FTK has a relatively strong balance sheet, and but it's interesting to me. He's buying another $1 million worth at 2. Wow. And he's on the board now too. And again, I mean, we don't have time for me to look into him more thoroughly, but I looked into him and like, all right, this guy. And he was buying in September. You know what I mean? He was involved this whole way down, and he's been buying for the whole year. Look at this. And so I remember looking into his actions, and he was buying in 3s, buying in 2s, and buying good, real money. And then, but wow, he bought again. I thought maybe he was done. Oh, buy FTK, FET, FTK. All right, maybe I'll do a tweet on this one too. It's one of the top positions in the portfolio. This is sick. Check this. Check the portfolio. I'm clicking on the dashboard. You can't see it, but that's where I'm clicking. Oh, we got to sort by column 2. Look at this. It's number 6 in the portfolio, and he's buying more. Sick. This is what I mean. The ones that are larger positions in the portfolio, a lot of them are already doubles and stuff, but still, they were still relatively larger positions back in the day. But they tend to have, not always, stronger balance sheets. Now, to counter that, CNR, I wouldn't say it's super strong, but it has enough interesting things about it where I'll cave on certain things. But FTK, I need to pull it up again. And I'll research it. Buy more, look into it. Shit, do we got time? Can I check it off real quick? Boom, pull it up. Oh, wow, he bought more at 2, huh? Yeah, so he was buying the whole way down, so it's just a question of did the story change? And with all that was happening in the energy space. Let me close out of some shit. Wait, FTK, right? I keep on confused. I was confusing myself back. There's also another one that I forget the name, but damn. Wow, he bought after the run up. Did they just announce? When was this? August 20th? We probably looked into it and I forget. Shit. I didn't make a note of it though, did I? August 17th? Why did it go up that day? Was it him buying? Did it go up because he was buying? Oh shit, it did. Look at the volume. 1 point, what do you see? How big is that? Oh, it's only 100. Wait a second. The hell is this? Okay, look at it's almost 1.5 million. Who cares? 1. He was half of it on August 20th. He drove up the price. Did he drive up? He drove up the price. No catalyst because it already passed. Maybe he was waiting for earnings. He was waiting for earnings. And what's the date on this? What am I looking? August. He was waiting for earnings. He got the earnings. He looked into he liked what he saw. He was waiting for the 10Q. They reported on August 6th. Or he had a blackout period. He's a director. What am I saying? He's a director. So he probably knew the results. But he probably had a blackout period. Maybe he had to wait till 10 days after. I don't know what the blackout period is. But he already knew the results. So he wasn't waiting. Sometimes funds are waiting for the results and then they take action. But it's kind of odd that they announced on August 6th. And then he waited until August 20th. Which is what, 2 weeks? Oh, 2 weeks exactly. Maybe there's a 2-week blackout period or something. Boom. I think we're on to this. Suck! And he was waiting to buy more. He liked what he was seeing with the company itself. And remember, he's a director. He's dialed in. Yes, and he's also heavily invested. You like to see this. How much does he own in the company? Shit. We're getting derailed. Who cares? This is good research. This is sick. He's got, filed a 13. Does he only own 5%? He owned 3.5 million as of the end of the quarter. What's he own now? 4.2. What? Yeah, that sounds right. Yeah. All right. Wow. Okay. Do we get time for the fundamentals? Come on. Oh, now I'm excited. Circ. Okay. So look at this. Net common overhang. 0. Boom. Oh, good. I remembered that it was a strong balance sheet. You only need to remember a couple key things. It's energy and energy play. It's equipment and services, but tangible book. So it was trading below tangible book, which was kind of absurd. But they have 63 cents per share in cash. Above and beyond. Look at this. Look at this balance sheet. Look at this balance sheet. So they just filed the 10Q. Now I think it was more. He knew what it was. He's a director. I bet it was blackout period. Look at this. Okay, let's look. 60 million in cash. And bear in mind, the market cap is just over 100. Remember we looked at it, and FTK was the smallest market cap in one of those early streams. Remember that? And we sorted by market, and it was the smallest company. It was the smallest company in the whole list here, CVGI, which has now been crushing it. But this is why. So probably overlooked by a lot of names, a lot of firms. Okay, so total current assets 101. Total, it's a net. Oh, I said this somewhere. Did I say this somewhere? 102. 101 minus 22. Oh, total. Oh, my bad. 35, 33. How many shares outstanding? 71. Wow, 96 cents. It's trading just above net. For what? Oh, wait, not anymore. Now it's trading. Oh, right. It was trading below net. Now it's trading above net, but not that much. It's trading at 2 times net. So this is what I'm talking. If you're gonna deal in an energy play, this is why it's heavy position. Because in March, I had a whole bunch of speculative positions, and I wasn't focused on this. But I'm like, if I'm gonna put a heavy allocation in this, I want it to be one that's unlikely to go bankrupt. So here we go. The super strong balance sheet, relatively speaking, and this dude's buying on the open market. What more do I need? That's the play. That's the thesis. It's 30 seconds. There's nothing more to say. Who cares? A huge revenue drop off. All right, we get it. But and look at all the purple and green. Like it was okay run for a little bit there. So I would need to dig back into this. But I already see enough. I already see enough that shit. Maybe I should be. If he's adding at $2, so I don't like to see this. You see this negative operating cash flow here? I don't like that. But it's counteracted by this other stuff I'm seeing. That's what I mean. So if I only saw this without the insider buying, I'd almost be like, forget this. Who cares? Who cares? Look at the huge revenue drop off. Look at this. But when you got the things when they're counteracting each other a bit, book value. So it doesn't trade at a huge discount to book value, but he knows the value of the assets. He knows. Not much free cash flow, so I concede some risk here. The revenues risky, energy risky, free cash flow. What's going on here? But clearly, I weight this stuff more heavily, huh? Like the insider action and the prices, their history of purchases, and the strength of the balance sheet. Definitely the strength of the balance sheet. That's a really heavily weighted item for me. Oh shit, that's sick. And I just looked at FET too, which I don't know. Yeah, which I put the tweet out on, but more risky than this company. But still, now I got two of these. I keep on confusing the two too. There's like a fuel tech company or something. Ah, whatever. Keep moving. Where were we trying to get through? I don't even remember. Oh, the insider buying. What else did we see? Oh, Greenhill. This is a broker dealer, and I don't even deal in financials that much. But these guys is Scott Bach and then who's the other guy? Robert Greenhill. They were buying a ton, and but then they stopped buying, and then it's like, bro, I didn't know what if they're actually gonna pull that stuff off. All right, look into GHL. But they were like controlling the company and buying more shares, and they were like enacting a share repurchase program. They were like they bought back a shit ton of shares. They bought like 50% of their shares over the past like 5 years or something. They went from like 30 million to 20 million. I still remember that. It's not even in the portfolio anymore because I sold out with everything else. It didn't get that cheap. See? I get mad when it doesn't get cheap. I'm like, come on, keep going. It stopped at 8. I'm like, forget about it. And it was the right decision again. Sick. But I was definitely in it before. I think I was in it right here, and I may have got some of these, but then I think I might have. Ooh, I probably got hit by this. I probably did. Oh, look at this. Oh, this looks good though. So you like to see the things that were kind of breaking out a bit, and then got hit because of all this going on. Ooh. Oh, I like this. This looks good. Look into GHL chart. That chart looks interesting. I was in it. I bet I got hit by this. That sucks. And then I maybe sold out because I didn't like what was going on. Anything else on that insider buying front? I thought there was one more. Select interior concepts. Wow, that chart looks nice. Nice. What do they do? Residential construction? What's the market cap? Oh, shit. It's kind of illiquid, but the B. Riley's involved. It's weird that I don't. It's weird that I'm not tracking it. That's all. All right, keep going. Oh, insider. Flowtech, that's sick. That's a big pickup today. Avis, Avis, I don't care. It's kind of interesting too with the whole Hertz thing going on there. What's this? Serious investment manager? I had to read that as serious. This is a really serious investment fund here. Okay, you should let us manage your money. We're very serious. All right, nothing else, right? Sick. Olin. Okay, we saw that. And then was there anything else I was gonna just pull up? I guess we did okay today. We did okay. 959. We got through the dash. Everything. A lot of stuff was up today. What was down? There was only biotech. Wasn't there anything down? GameStop was down. That's why we bought. All right. Okay, that was good. We got through some charts too. Talk GameStop. Screen dollars. Weekly. We should get into this weekly thing. You know what I mean? I start thinking about. Let me start. Well, now we're getting into like we're 1 month into the stream. I needed to like just do the stream, right, and then kind of see how it flows. And now I'm like, all right, we definitely need some time on a Friday to like look through the charts. It's perfect time. You get the weekly charts and stuff. Maybe it's bi-weekly. So let me start putting pen to paper or mouse to Evernote and start laying out what that looks like. Like what was today? Monday? And Monday was like good to regroup on some of this stuff, see what was happening in the market. And you can't always stick to it, but if you have a general guideline, then that would be helpful. I feel like I've been saying that every damn stream, but I haven't. I kind of want to get through a month, get through 2 months or something, but we'll see. The daily movers, weekly movers, we haven't really been doing weekly movers. But it's important because we're not doing the stream every day. If you do the stream every day, matters a little bit less, but we're missing Tuesday and Thursday right now. And legit, some days I miss what happened that day. So the weekly would be a good idea. So I'll do that. There was one other thing. We look at the charts too, like looking at, I kept this up today too. Remember Friday we were going through the charts? We could have rounded out the charts. Who cares? I don't care. There was 40 charts left because I knew we got through 100. Maybe I'll keep this up for Wednesday. We'll see. Anyway. Hey. All right. Good stream. Oh, I got a little bit of... Thanks for joining in today. Hope you enjoyed. Had a good time. That's all for today. I will see you on Wednesday. All right, folks? Okay. Peace out.